Hello everyone. So today we are going to start with the third unit of the partnership account, that is admission of a partner. What happens when the partner is admitted to a partnership firm? In that case, how to prepare the books of accounts. Okay. First of all, let's start with the story. Okay. What happens during admission of a new partner? Let's see what happens during admission. Okay. Let's take some example. There are three people. This person's name is Karthik. This is Krishna, and this is Chinmay. Let's change this guy's color. Okay, let's change this guy's color. Fine. Now, let us assume these both people are into a partnership firm, and these both are into partnership firm. Their firm's name is Lion Forest. Whatever the name, no issues. Lion Forest. Now these both want to. Now Krishna says that I want to admit Chinmay into my firm because he has some skills that might be required to grow our business more. He has some skills that we need. I say okay, no issues. We can admit him. We can admit Chinmay into our partnership firm. But the thing is, our partnership firm has been into existence for around 10 years now. The partnership firm, whatever we have, the Lion Forest partnership firm, whatever we have, is into existence for 10 years now. Now, Chinmay wants to come in. Okay, fine. He's saying that he will bring a capital of rupees 1 lakh. Big game what he's bringing in. Chinmay says, but Karthik says, only capital he will bring. What about the goodwill? Okay, we have run the firm for 10 years. Now he is simply coming in and taking our profits. Why profits? See, let us say the firm is earning a profit of 10,000. Okay, equally. So if I have to divide this equally between the partners, how much will that be? Okay, let's change the figure a bit. Okay, 9,000 per annum profits I am making. This is my profit. Okay. Now if I have to divide this between Krishna and Karthik, how much will each of them get? Rupees 4,500 each. Right? Because I am dividing the profits equally now. But once when Chinmay comes in, I should divide the profits equally. But now how much will each of them get? It is 9,000 divided by 3 people. That is rupees 3,000 per annum. That means before it was 4,500 each, but now it is only 3,000 per annum. That is 3,000 each partner is getting. That means Karthik and Krishna both are losing how much? 1,500 rupees. 1,500 rupees profit they are losing. Why? Only because they have admitted Chinmay. Profits are not increased, but he is getting the profit share. Why? Simply why? Because he is invested the capital. What about for 10 years, Krishna and Karthik have grown the business, right? Because the business is at that point, so that they are earning 9,000 per annum as a profit. Now Chinmay is simply coming in and saying that I want profit share. I am only giving you the capital of rupees 1 lakh. Is it fair? Is it fair on these both people? You people tell me, is it fair on both of these people? No. Why? Because they have run the business for 10 years now. They have been breaking their minds for the business for 10 years and they have come to a point where they are earning this much profit. Now Chinmay is simply coming in and getting a share of the profit. Why should they give? So now they both say that we want to make a deal. Karthik says that I don't know, but I want to get some compensation for that. See, because Karthik is letting go how much? From 4,500, his profits has reduced to rupees 3,000, right? So basically 1,500 rupees he has let go. Why? To pay whom? To pay Chinmay. Now, because for this he needs some compensation, right? Because from next year onwards, when Chinmay comes into the firm, now his profit will reduce by 1,500. Whose? Karthik's and Krishna's. Both profit will reduce by rupees 1,500. Why? Because Chinmay is admitted. Now they need to be compensated, right? They need to be compensated for the profits. Okay. Because of that, he brings in something called as goodwill. Okay. Now whatever treatment or whatever the valuation of goodwill we have seen, that we will dealt over here now. So now we need to find out the value of goodwill of the firm, and out of that, whatever share Chinmay is getting, that is 1 by 3 in my example, whatever share of profit Chinmay is getting, up to that extent he has to give goodwill to the firm, and that goodwill will be divided between whom? Between Krishna and Karthik. So these Krishna and Karthik, these both people will say, we will divide among ourselves. Why? Because these people are the ones who were working for the firm for 10 years, right? So because of that, they will be entitled to the goodwill. Who will bring in goodwill? Chinmay. So Chinmay will say, okay, I will bring in extra 10,000 rupees as goodwill. This will be divided between Krishna and Karthik in their ratio. The what ratio will they divide it? Now comes the question, what is the ratio that they will divide the goodwill in? Now this is the question. This will be divided in something called as sacrifice ratio. Now what is the sacrifice ratio? Sacrifice, what do you mean by sacrifice in English? That's something that is let go. That is you are sacrificing something, right? You are sacrificing your girlfriend or boyfriend for the studies. So that is the sacrifice that you are doing, right? You are sacrificing your Instagram. That everyone will be like, okay, no issues. Okay, that you are sacrificing something, right? You are sacrificing your something for the new person who is coming in, right? So if you see, it was 1:1 before, but now it is 1:1:1. This is the new ratio. Sorry, 1:1:1. This is the new ratio, right? Karthik and Krishna both are sacrificing 1,500 equally. Let's assume equally. So therefore, this 10,000 rupees should be equally divided between Karthik and Krishna. Why? Because these both are equally letting go some of the portions of their profits, of their future profits, in the name of Chinmay. Right? So now the Chinmay is coming in, for him, we need to give some profit margin also, right? Because see, we know that no partner can be for a zero loss. Because of that, we should give him some profits if he is a working partner. Okay. Now let's learn all of these things in the chapter. Let's see. So let's start with the new concept. That is computation of new profit sharing ratio. What do you mean by new profit sharing ratio? That means whenever a person is admitted, what should be the new profit sharing ratio? See, before it was what? 1:1. But now once Chinmay is admitted, I have changed the ratio to 1:1:1. That means we are losing on something. Right? Okay. That sacrifice ratio is computed in this way. Old ratio minus new ratio. Okay. Now why is this formula? I will tell you why. Okay. Let's look at the same example once again. Okay. Now I know that this is my new ratio. And this is my old ratio. Okay. So now you people tell me, how much does 1:1 mean in percentages? In percentages, tell me how much is 1:1. 50-50. 50-50 percentage. This can also be written as 50% is to 50% equal division. Okay. But now, once when Chinmay comes in, how much is the ratio? It changes to what? 100 divided by 3. If I do, it is 33.33% each. Right? So that means to compute how much is sacrifice. See, Karthik had 50, but now it is 33.33. Krishna also had 50, now it is 33.33. Right? They both have sacrificed something. They both have sacrificed some ratio for the purpose of Chinmay's admission. Now what is the amount or what is the ratio that they have sacrificed? How to find it out? Old ratio, we know that always a larger number is subtracted from a smaller number to find out the positive figure, right? So here also, old ratio, that is a bigger number, minus new ratio. So same has been put into a formula over here. Old ratio minus new ratio, right? So how will I write this down over here? 50% minus 33.33%, that will be equal to how much? Around 16.67%. So 16.67 is what? Is the sacrifice ratio. This is what? My new ratio. This is what? My old ratio. Clear? This is how you compute the sacrifice ratio. This is the logic. Okay. If you want to find out the new ratio, in that case, sacrifice ratio will be given to us. So what to do? Just interchange things. This comes over here, this comes over here. Done. Sorry, not this. This comes over here, sacrifice ratio comes over here. Simple. So the formula will be new ratio is equals to old ratio minus. Let me just write it down. So new ratio will be equals to old ratio minus sacrifice ratio. Done. Now how will I write this down? How will I write it down? So if I write it down, I will write old ratio minus sacrifice ratio is equals to my new ratio. Got it? How to find it out? 33.33. 33%. Yes. Now, why should I compute sacrifice ratio? Again, if I have to look at a theoretical point of view, basically during admission, generally, some partners gain from the admission, while others lose from their profit sharing. Right? In our case, Chinmay was gaining because of the admission, because before admitting into the partnership firm, he had no profit share. But since he has been admitted as a partner in the partnership firm, he is getting some profits. Right? It is a gain because of the admission. Because of the admission, he is gaining something, while others lose their profit sharing. Who is losing profit sharing over here? Krishna and Karthik both are losing their profit shares because of Chinmay's admission. That EDS has come into the partnership firm. Because of that, they are losing now, right? So to compensate such partners, sacrifice ratio needs to be computed. And on this sacrifice ratio, goodwill brought in by new partner will be divided between old partners or existing partners. Okay, so depending on the sacrifice ratio, how much sacrifice you are making, depending on that you will get the profits, or sorry, the goodwill share. Simple as that. If you are sacrificing more, you will get more goodwill. If you are sacrificing less, you will get less goodwill. Clear? Okay. Now let us learn different ways of computing the new ratio or the sacrifice ratio. Fine. Okay. There are 5 different case studies. Depending on these case studies, you will be asked in the question. Okay. So let's see. First one, when new partner's share is given. Okay. Whatever the new partner has been added to the firm, his share is given. But the questions is silent about the sacrifice made by the old partners. Now we don't know what is the sacrifice made by the old partners. But now we need to find out what? We need to find out the new share, the new sharing ratio we need to find out. Okay. So A and B are partners. Example, look at the example. A and B are partners sharing profits and ratios in the 3:2. What is this 3:2? This is my old ratio. Okay. They admitted C for 1:3 share. They admitted C. Now what is this 1:3 share? This is the new partner's new share. Okay, fine. In the future profits, calculate the new ratio. Okay, they have asked us to compute the new ratio. But do I know the sacrifice ratio? No, sir, nothing is given. Okay. Now let's see how to compute it. See, let us assume the total profit is 100%. Yes. So in this case, see, whenever I say 1/3, that means what does the whole mean? 3/3. Yes. Divide. What will you get? 1. That means the whole will be 1. See, I am not going in depth with the ratios. Okay. So please look at the chapter of ratios and then come over here. I am not be going through the basics of multiplying and dividing, all these things. Clear? Okay. So now the whole will be 1. So therefore, total profits will be 1. Remaining profit after admission of the new partner will be, how much? 1 minus 1/3. Yes, see, 1 is the whole. That means out of that 1/3 is given to the new partner. They have clearly mentioned that 1/3 is given to the new partner, right? So that means remaining profit will be between whom? These both. The remaining profit will be available for A and B. So now, what is the remaining profit? 1 minus 1/3 is what? 3 minus 1/3, that is equals to 2/3. So 2/3 is the ratio remaining for A and B, Now, I need to divide this 2:3 between those both people. How to divide it? Since no other ratios are given to us, we will divide it in the same ratio, that is 3:2. Clear? So we will divide this into same ratio, that is 3:2. Okay. So now, how to divide this? To divide it, I will do this. So for A is equals to 2/3 into 3/5. Where did I get 3/5 from? 3/5 I got from this. 3:2 is equals to 3/5. And 2:3 is available from this part. So basically I am dividing this 2/3 in 3:2 ratio. So that will be how much? The new ratio will be 3 to the 6, 5 to the 15. Now for B, what is the remaining profit? 2/3 into the ratio of 3:2, right? So 2/5. That will be the answer will be 4/15. Okay. So for C, the the ratio was 1 by 3. So convert it to the denominator to 15. 5 3 is 15. So 5 by 15. So this will be 6 is to 4 is to 5. This is my what? New ratio. See, remember, always remember, whenever you are writing the new ratio 6 is to 4 is to 5, 6 is to 4 is to 5, remember that denominator should be the same. See, add 6 plus 4 plus 5. How much will that be? 15. 15 is the denominator. This should be confirmed, or else the answer will be 6 is to 4 is to 1. Why 1? Because 1 is to 3, sir. No, this is wrong. This is wrong. Clear? Okay. All should be in the like terms. Remember like and unlike terms. Okay. Next. Okay, next case number 2. When new partner purchases his share from old partners in a particular ratio. Now they have given us at what ratio the partners are sacrificing their shares. Okay, look at the question. A and B are partners sharing the profits in the ratio of 3:2. They admit C as a new partner for 1/3 share. They admit C as a 1/3 share in the partnership for future profits, which he gets in 1:9 from A, 2:9 from B. Okay, calculate the ratio. Okay. Now if we see 1 by 9 plus 2 by 9 is equals to how much? Is equals to how much? 3 by 9. If I simplify it more, it will be 1:3. Matching. So that means A and B have sacrificed in these particular ratios. This is my what? This is my sacrifice ratio. So now compute the new ratio. So again the formula will be what? New ratio was equals to old ratio minus sacrifice ratio. Do we have sacrifice ratio? Yes sir, this is a sacrifice ratio. 1:2. Right? This is the sacrifice ratio, not 1:2, 1 by 9, 2 by 9. Clear? Okay. Now for A equals to what was the old ratio? 3 by 5 minus 1 by 9. How much will that be? How much will that be? 9 3s are 27 minus 5 1s are 5 divided by 5 9s are 45 is equals to 22 by 45. Then for B, 2 by 5 was the old ratio. Remember, old ratio minus what? How much? 2 by 9. 2 by 9 was sacrificed by him. Yes. So 9 2s are 18 minus 5 2s are 10 divided by 45 is equals to how much? 8 by 45. Then the denominator is 45, right? So what was C's new ratio? Do we have C's new ratio? Yes. See, this is C's new ratio 1 by 3, right? So 1 by 3 if I do 1 by 3 equated to 45, how much will that be? 45 divided by 3 if I do 15. So 15 by 45 will be the new ratio. So if I have to add 22, 8 and 15, how much will that be? Just check. 22 plus 8 will be 30, 30 plus 15 will be 45. It's fine. So all of these are matching. So what is the new ratio? My new ratio is equals to 22 is to 8 is to 15. Clear? Okay. Going forward. The old partners surrender. Remember the word surrender. Surrender in a particular fraction of their share in favor of new partner. So here they are surrendering some part. It's not the sacrifice ratio. See, sacrifice is different, surrender is different. So whenever you see the word surrender, there is a specific way you need to solve the question. Look at the question. A and B are partners sharing in the profit and ratio in the 3:2 ratio. Okay. They admit C as a new partner. Fine. A surrenders 1:3. Sorry, 1 by 3. 1 by 3rd of his share, and B surrenders 2 by 3rd of his share in favor of C. That means they are surrendering some portion, not sacrificing. This is not the sacrifice ratio. Here I simply cannot add 2 by 3 plus 1 by 3 whatever it is and get the answer as 3 by 3. No. Whenever I see this that it is totaling to 1, that means it is not the sacrifice ratio. It is the surrender ratio. Surrender ratio is different than the sacrifice ratio. So how to compute it? So first of all I need to find out the sacrifice ratio. How to compute this? So 3 by 5 was the old ratio multiplied by the surrender ratio. It is 1:3. The surrender ratio of A, that is how much? 3 by 15 is the sacrifice ratio. 3 by 15 is the sacrifice ratio. Then B, 2 by 5 into what? How much is the surrender? 2 by 3. So 2 by 3 is equals to 4 by 15. So my sacrifice ratio will be how much? 3 and 4. So 3 is to 15, 4 is to 15. 15, 4 is to 15. Clear? Okay. Now I need to compute what? New ratio. So new ratio will be what? Again we know that new ratio is equals to old ratio minus sacrifice ratio. Yes, okay. So for A, what is the old ratio? 3 by 5, because the profit sharing was 3:2 ratio. So 3 by 5 minus sacrifice ratio. How much? 3 by 15 is equals to, I can just equate this 3. So 9 minus 3 by 15 is equals to 6 by 15. And for B, 2 by 5 minus what? 4 is 4 by 15 minus 4 by 15 minus 4 by 15 is equals to, if you equate 6 minus 4 by 15 is equals to 2 by 15. So for C, the ratio will be how much? What was the new ratio of C? They have given us the new ratio. No, right? So what can I do? What can I do? Just add the sacrifice ratio. Just add the sacrifice ratio. We'll get the new ratio. 15 plus is equals to 7 by 15. So that will be 7 by 15. So my new ratio is equals to 6:2:7. Clear? Okay. See, I can just add sacrifice ratios to find out the new ratio of the new partner Remember this. Clear? Okay. So whenever you see the word surrender, remember this. This is the additional step you need to do to find out the sacrifice ratio. If you add sacrifice ratio, you will get the share of the new partner in the new firm. Fine. And this sacrifice ratios needs to be used to find out the new ratio using this particular formula. The formula. Clear? Okay. Now going ahead. Case number 4. When new partner acquires his share. Case number 4. When new partner acquires his share entirely from any one partner. So what is happening over here? See, there were 2 partners. We have added a third partner. He is taking only from one partner. One more partner is sacrificing nothing over here. 0. So look at the question. A and B are partners sharing profits in the ratio of 3:2. Now they admit C for 1/5 of the shares in the profit which he acquires entirely from A. So basically from A only he is taking. Is B sacrificing anything? No sir. B is sacrificing nothing over here. So B's ratio what it was there will remain the same. It won't change. Clear? Okay. So now compute the new ratio. So that means A's ratio was 3 by 5, out of which he has given up how much? 1 by 5. So the new ratio will be how much? 2 by 5. For B it was 2 by 5. And for C it will be how much? 1 by 5. Because 1 by 5 is already given to us. This is how I computed the what formula? New ratio is equals to old ratio minus sacrifice ratio. Remember the same formula I have used over here also. This is the old ratio, this is the sacrifice ratio, because this was the whole share taken out from A. Because the question clearly says acquires entirely from A. B is sacrificing nothing, so his ratio would not change. So now tell me what is the new ratio? 2:1. Clear? Yes. Okay. The last case, case number 5. When the new partner acquires his share from old partners in certain ratio. Now we know the new partner's share, and from which ratio is he taking it from the old partners. That also we know. Let's see how. So A and B are partners sharing profits in the ratio of 3:2. C is admitted for 1/5 of the share. So this is the C's new ratio. 1/5 share which he acquires from A and B in the ratio of 2:1. Now from A and B he is acquiring it in the ratio of 2:1. Calculate the new ratio. Now you need to compute the new ratio for the partner. Okay. Now let's see what to do. So A, right? So what was A's share? So let's find out sacrifice ratio first. First of all. See, whatever is given to us is not a sacrifice ratio. This is the ratio in which this is divided between A and B. So how to find it out? So simply 1 by 5 into 3 by 5 is equals to, now how did I get, not 3 by 5, sorry, it is 2 by 3. It is 2 by 3. Clear? Is equals to how much? 2 by 15. Same do it for B. B was how much? For 1/5 share he is giving up how much? 1 by 2, 1 by 3, right? So that will be, pardon me, 1 by 15. Okay. This is what? This is my sacrifice ratio. How to check? How to check? Add these both. How much will that be? 3 by 15. Just a minute. 3 by 15, that will be simplified as 1 by 5. Same. Matching. Yes. So that means the sacrifice ratio, whatever we have found, it is correct. Okay. Now let's start. So we have found out the sacrifice ratios. This is my sacrifice ratio. Okay. Now find out the new ratio. How do you find it? Simple. Again use the formula. New ratio is equals to old ratio minus sacrifice ratio. Simple. Okay. So how do you do it? So for A, let's find out. So A has an old ratio of 3:2. So 3 by 5 minus what? 2 by 15 is equals to, if I have to equate it, 3 is a, so 9 minus 2 by 15 is equals to 9 minus 2 will be 7 by 15. Then for B, the ratio was 2 by 5, the old ratio, right? For B, the old ratio was 2 by 5 minus the sacrifice ratio 1 by 15 is equals to, again 3, so 6 through is minus 1 by 15 is equals to 5 by 15. Okay. And for C, it was how much? For C, it was how much? 1 by 15, I guess. Yes. 1 by 5, so 1 by 5. If I have to equate it, how much will that be? 3, so 3 by 15. Okay. So what is the new ratio? New ratio is equals to 7:5:3. This is how you find out the ratios. Clear? See, always remember, whenever you see a sacrifice ratio, that won't add up. That won't add up to 1. But it adds up to make what? To make the profit sharing ratio of the new partner. If you see, right, the profit sharing ratio new partner. If I add these both, it will be equals to what? The profit sharing ratio of the new partner. But when it comes to surrender ratio, where I have seen surrender, where is okay, surrender ratio. If I add both the surrender ratios, it will add up to 1. It will add up to 1, right? This is your hint that it is a surrender ratio. Whenever you see a surrender ratio, you need to find out sacrifice ratio separately. That's not a sacrifice ratio. Surrender ratio, if you add this and this, how much will that be? 1. Add sacrifice ratios, how much will that be? Will it be equals to 1? No. This both will add up and make what? The new ratio of the new partner. Clear? Okay. So now let's start with the next topic, that is my accounting treatment for admission of a partner. So when a partner is admitted into a partnership firm, in that case, how to account it in my books of accounts, that we'll see. Okay, this is the holistic procedure. I'm going to skip this part and I'm going to just look at the basics. Okay, let's see. Steps in case of admission of partner. So what steps should we take in the books of accounts when a partner is admitted into a partnership firm? So first of all, we prepare something called as revaluation account. So what is this revaluation account, sir? This is an account where, see, once a partner is admitted, the existing partners think that whatever assets or liabilities they have, they need to be revalued, either increase or decrease them. Depending on that, we will prepare what? Something called as revaluation account. It's similar to your P&L account, where the profits go on the credit side, whereas the incomes go on the expenses go on the debit side, right? So this I will teach you how to prepare, don't worry. Then after the revaluation account is prepared, the net difference of the revaluation account, that is debit minus credit or credit minus debit, whatever it is, the profit or loss of that will be transferred to the partner's capital account. Just now we have seen how to prepare partner's capital account, right? So similarly, the same thing will be transferred to the partner's capital account. In what ratio? In profit sharing ratio. But while transferring it, it should be transferred only to the old partners, the new incoming partner, whoever is there, to him no share should be given. Why? Because whatever revaluations are done, from that whatever income or expense is there should be borne by the old partners, because the new partner is coming in just now. He's coming in just now, right? But whatever the affairs of the firms were there before him are not at all concerned to him. That is why whatever profit or loss because of the revaluation of the assets or liabilities will only be borne by the old partners. In my example, it was Karthik and Krishna. Chinmay will not get any share of the profit or loss because of the revaluation. Remember. Then going ahead. Then we need to compute the goodwill and divide them among the partners without opening goodwill account. So before these two steps, there is one more step. That is compute sacrifice ratio. Just now we have seen the method, right? How to compute the sacrifice ratio. In that method, if the sacrifice ratio is given the question straight away, just take it. Don't do anything else. If it is not given and they give the old ratio, the new ratio, or whatever the case might be out of 5 cases, then you need to compute the sacrifice ratio and then go for the goodwill computation. After the goodwill is computed, after the sacrifice ratio is also computed, then divide it among the partners, old partners and the new partner. That we have to divide. Now sir, how to divide it? And that too without opening goodwill account. So without passing any entry to goodwill account, we need to open goodwill account, it seems. How to do it? We pass this entry. We pass this entry. So after some amendments in the Companies Act, there is no goodwill account that will be opened in case of, sorry, not in the Companies account, in the AS. Once the amendments were done in AS 26, I guess. So once the amendments were done, so no goodwill account will be opened in case of any change in the partnership, any reconstitution of the partnership. Clear? So we pass this entry. Now, sir, what is this entry? I will teach you what this entry is. See, I had before told you what was the reason for valuing goodwill, dividing goodwill. Because when Chinmay comes in, he needs to bring some amount for the reputation of the firm. The firm has worked for 10 years, 10 long years. So for that 10 long years, the firm has earned some reputation. That reputation we call as what? We call it as goodwill in this case. In this case, we call it as goodwill. Now, Chinmay is coming in simply because the firm is good. Then what about Krishna and Karthik? These two people have put in their sweat and hard-earned money for so long and made the firm capable of being so reputed firm, right? So because of that, to compensate those old partners, Chinmay has to bring in what? Chinmay has to bring in goodwill, and that he has to divide between whom? The sacrificing partners. What is sacrifice? What is the sacrifice they are making? The sacrifice in the future profits or losses of the firm. The sacrifice in the future profits of the firm. Yes, we have seen that clearly, right? Okay. So now this has to be divided between the partners, right? Let us say Chinmay has bought in 10,000 rupees as a goodwill. For what share? For 1/5 of the share. This is the new share of Chinmay. This is the new share of Chinmay. Okay. And Karthik's new share and Krishna's new share is, let's say, 2 by 5 each. 2 by 5, 2 by 5. Clear? Okay. Now I need to divide this. I need to divide this 10,000 among Krishna and Karthik. Karthik and Krishna. Right? So how to divide it? How will I divide this? See, let us say the sacrifice ratio is 3:2. This is my what? This is my sacrifice ratio, for example. Okay. Now, this goodwill of rupees 10,000, whatever Chinmay has bought in, except capital. See, there can be 3 or 4 cases that I will explain it to you while solving the questions. But currently, assume that 10,000 was bought in cash or bank format in the business by Chinmay. So this goodwill should be divided in what ratio? 3:2 ratio. Between whom? Between Karthik and Krishna. Now, after division, what happens? The value comes up to what? For Karthik, it is 3, right? So the amount of goodwill received by Karthik is how much? 3 means 6,000. And over here is 2 means 4,000. I have just divided the rupees 10,000 into 3:2 ratio. Clear? Okay. Now, these both are sacrificing some of the profits, the future profits, on behalf of whom? On behalf of Chinmay. So for that, as a compensation for that sacrifice, they are receiving what? They are receiving goodwill over here. Now what entry to pass to show the goodwills in the books? So I pass an entry that is gaining partners capital account debited to sacrificing partners capital account. Now what the entry will be? The entry will be who is a gaining partner? Who is gaining over here? Chinmay is gaining over here, right? Chinmay is gaining 1/5 of the future share of the profits. So he is a gaining partner. So the entry will be Chinmay's account, capital account debited. Chinmay's capital account debited to sacrificing partner. Who are sacrificing over here? Both Karthik and Krishna. Both are sacrificing over here, right? So the entry would be to Karthik's capital account. Karthik's capital account and to Krishna's capital account. Krishna's capital account. Now, coming to amounts, how much was the goodwill brought in by Chinmay? It was rupees 10,000, right? How it was divided between Karthik and Krishna? In rupees 6,000 towards Karthik and rupees 4,000 towards Krishna. This is how it was divided. Yes? Okay. Now, sir, what is the logic behind passing this entry? What is the logic? I will tell you the logic. See, whenever goodwill is brought in by Chinmay, Chinmay gives it off to whom? To the old partners, because they are sacrificing something. Both Karthik and Krishna are sacrificing something, right? So he is giving some amount to whom? To these both people. And we know that whenever partners' capital reduces, see, This is what whatever was brought in will be what the entry will be. Bank account debited to Chinmay's capital account. Why did I pass this entry? For rupees 10k. Let's say for rupees 10k, I pass this entry. Why am I passing this entry? Because whatever amount he has brought in as a goodwill is increasing the value of his capital. And we know that whenever capital increases, we will credit the account. We will credit the account. And when our bank balance increases, we will debit the account, right? So because of that, now we know that Chinmay has brought in some money as what? As goodwill. As goodwill, he has brought in some money. Except capital, he has brought in some goodwill over here. So I pass this entry now, where I am crediting Chinmay's account because his balance is increasing. His capital balance in my books is increasing. Yes. Now, whenever he is transferring this particular amount to Karthik and Krishna, see, this entry is for what? For bringing in the goodwill. Sorry, bringing in the goodwill. Right. Now, he is transferring this amount of rupees 10,000 to whom? To Karthik and Krishna. Right. That means his capital value is reducing by how much? Rupees 10,000. And whenever capital balance reduces, we will debit the account. So I have debited Chinmay's account over here. Clear? Okay. Going further. Why is Karthik's account and Krishna's account credited? Because these both are getting some money from whom? From Chinmay. These both are getting some money because they are sacrificing some profits of the future. So Chinmay is giving them some goodwill amount. Right? This will be adjusted in their capital accounts directly and no cash will be given to them directly. Remember this. Chinmay will bring in some cash. This cash will be in the books of the firm. Then this will be divided between Krishna and Karthik, not in cash form but as an adjustment to their capital accounts. Now because of this adjustment, what happens? The capital balances whatever they have will increase. Because see, Chinmay is giving the money whereas Karthik and Krishna are receiving the money. Right? So whenever they are receiving, their capital balance should increase. So because my capital balance is increasing, I am crediting the entries. Whenever capital increases, we will credit the entries. Remember the journal entries? Yes. So we have credited. So the entry will be always sacrificing partner's account credited and debit what? Gaining partner's account. Clear? This is the entry. You can just mug up this entry, but I have also told you how to pass this entry logically. Remember, okay? So the logic also is taught and also the mugging up part is also taught. But for examination purpose, just by heart, gaining partner's account debited to sacrificing partner. If you don't want to by heart it, no issues. I have told you the logic behind it also. Clear? Okay. So moving ahead. So the third part was done, right? We have computed the goodwill, found out the sacrifice ratio and divided the goodwill among the old partners and the new partner, by what? By without opening a goodwill account. See, nowhere goodwill account is opened, right? Nowhere goodwill account is opened. Yes? Okay. Then, fourth part. Prepare partner's capital account to divide the reserves and the remaining adjustments. Okay. So, in a partner's capital account, remember we had seen the profit and loss adjustment account. Similar to that, we prepare what? Now, partner's capital account. After that, we prepare partner's capital account. So, what happens in partner's capital account? Whatever profit or losses in the revaluation account was there will be transferred to partner's capital account, the first entry. Whatever reserves were there in the balance sheet, we might have some reserves. Out of each year's profit, we might transfer some amounts as a reserve for the future use, right? This reserves belongs to whom? Belongs to the old partners only. This reserve, whatever is there in the balance sheet, belongs to old partners only. Why old partners only, sir? Because the new partner is coming in today. Whatever the reserves are there in the balance sheet is for the past 10 years that was accumulated. Right? Now, whom does this belong to? This only belongs to the old partners and not to the new partners. So, this whatever reserves are there or whatever profit or loss amount you see in the balance sheet would be divided between the old partners. Clear? And in the remaining adjustments that I will teach you what adjustments are to be done in the partner's capital account. Okay. So once the partner's capital account is done, you get the closing balance of partner's capital account. This balance should be transferred to my balance sheet and also adjust the values of assets and liabilities that are revalued. In the first step, we had revalued some assets and liabilities. Remember, we had increased or decreased the value of some assets and liabilities. Those increase or decreases are to be adjusted in the value of assets and liabilities in the balance sheet now. Whatever the new balance sheet we prepare after admitting the new partner, whatever balance sheet we prepare, in that balance sheet we need to adjust those values. Clear? Okay. This is how we need to prepare the accounts for admission of a partner. Okay. Now what we will do is we will straight away jump into the questions. Now illustration number 4. Dalal, Banerjee and Malik are partners in the firm sharing profit and losses in the ratio of 2:2:1. So I will just mark this. This is my what? This is my what? This is my old ratio. Okay. The trial balance, sorry, their balance sheet as on 31st March 2022 is as below. So they have given us the liabilities and assets. Okay, fine. Just have a look at it. Fine. Now, what are the adjustments to be done? The partner have agreed to make Mr. Mistry as a partner with effect from 1st April 2022 on the following terms. So, was Mistry there before? Mistry was not there, right? Mistry was not there. So, now they are admitting whom? Mistry to the partnership firm. Mr. Mistry shall bring 5,000 towards his capital. Okay, fine. Then, the value of inventory should be increased by rupees 2,500, which is the income for me, because whenever asset increases it's the income for me, and whenever asset decreases it's the liability, it's the expense. Whereas whenever a liability increases it is the expense for me, whereas whenever a liability decreases it is the income for me. Clear? Okay. Furniture should be depreciated by 10%. See, whatever increase or decrease I have told you just now is completely logical. Clear? Just understand what assets means, what liabilities means, and depending on that what increase or decrease means. Don't mug it up. Don't please mug it up. Clear? If you mug it up over here and in examination some adjustments are twisted over there, you will get completely confused. See, asset is a what? Asset is a asset for us, right? It's a kind of a asset we have in a business. So whenever it increases, the value of that will be a income for us. Whereas if it decreases, it will be a expense for us. Clear? Okay. And furniture should be depreciated by 10%. Fine. Reserves for bad and doubtful debts should be provided at 10% of trade receivables. Then the value of land and building should be enhanced by rupees by 20%. Sorry, not rupees, by 20%. Then value of goodwill is to be fixed at 15,000. So whatever the goodwill of the firm is there, the firm, see, this is not his share of goodwill, but it is the firm's goodwill. It is firm's goodwill, rupees 15,000. General reserves will be transferred to partners capital account. See, in the question, we have general reserves over here, right? This general reserve, whatever was there, should be written off and transferred to what? To the partners capital account. So you tell me, will the partners capital balance increase or decrease because of this transfer? Think and tell me. It will increase. Why? Because whatever reserves are here, if I need to clear it, I need to transfer it somewhere. I will transfer it to all the three partners, right? From general reserves, it is being transferred to the capital account. So my capital balance will increase, general reserve balance will decrease, right? And because of this way, my balance sheet will be tallied. There is no difference in the balance sheet. Clear? So this will increase the value of my what? Of my partners capital accounts. Then new profit sharing ratio shall be 5:5:3. 5:5:3 and 2. Okay, fine. 5:3:2. Fine. Now I will just mention the PSR also. The new profit sharing ratio is equals to 5:5:3:2. Now first what we will do is, we will prepare what is given to us. What to prepare here? Nothing is given. So we need to prepare what? We need to prepare revaluation account. Then we need to prepare partners capital accounts, and we need to prepare the new balance sheet. The new balance sheet after the admission of new partner. Okay, these many things we need to prepare. Now, revaluation account. See, revaluation account is also called as profit and loss adjustment account. Remember this, okay? Because the terminologies might change here and there, but the whole thing, preparing the whole thing remains the same. That won't change. Clear? Okay. Now let's start. See, whatever gains are there will be on the debit side. Sorry, on the credit side. But whatever losses are there will be on the debit side. Okay, let's start. So let's go with the first one. What revaluation was done? The value of inventory should be increased by 2,500. So inventory we have over here, right? So this inventory value, whatever is there, should be increased. So whenever inventory increases, it is a income for us, right? Whenever asset increases, it's a income for us. So the entry will be by inventory. Now, sir, what value to take over here? We should take only the income or the expense value, not the full value of the asset. Clear? So what is the difference? What is the increase over here? By rupees 2,500. So just take 2,500 over here in the amount column. Okay. Then next, furniture should be depreciated by 10%. So the depreciation of the furniture will be how much? By 10%. So what is the value of furniture? It is 6,500. On that 10% will be how much? 650 rupees. So depreciation of furniture will be an income or expense, it will be an expense. So 2 furniture by 10%. So 6,500 into 10%, that will be how much? 650. Then going ahead. So this is done. Then reserves for bad and doubtful debts should be provided 10% of trade receivables. So what is the value of trade receivables? 5,500. And whenever I am providing for bad and doubtful debts, will there be a income or expense? It will be obviously be a expense. So 2 provision for bad and doubtful debts. Okay, no issues. 5,500 into 10%. That will be rupees 550. Then going ahead. So this is also done. The value of land and building should be enhanced by 20%. So increase the value by 20%. So the difference would be how much? So land value is rupees 25,000. Will it be an income or expense? Whenever my asset value increases, will it be an income or expense? It will be income. So on the credit side, by land and building. How much is the value? 25,000 into 20%, that will be 5,000, I guess, into 20%, that will be rupees 5,000. Okay, then next, this is also done. Any other changes over here? Goodwill will be fixed, not a revaluation. General reserves, we will touch it in the capital account. So done. So we are done with the revaluation account. Okay, now find out the difference figure. So 2,500 plus 5,000 minus 650 minus 550. 6300. So to what? To partners capital account. This is what? This is profit on revaluation. This is my profit on revaluation. So partners name Dalal, Banerjee and Malik. So I will just write D, Dalal, Banerjee and Malik. Now in what ratio should I divide it? Tell me this. In what ratio can I divide this? It should be divided always in the old ratio. Clear? It should not be divided in the any other ratio, but in the old ratio. Why in the old ratio? What is the logic behind it? Because see, whatever profits they have earned is for the revaluation done for the assets and liabilities which were there before the admission of the new partner, right? So that means it has to be divided in what? Into the old ratio only. Clear? Fine. Now divide it 2:1. So again the same trick. 6,300 divided by 5. Why 5? Because 2 plus 2 plus 1. How much? 5. Right? So divided by 5 equals to 1,260. Now into 2 equals to, that is how much? 2520. Then again 2 equals 2520. Then 1 equals 1260. So we have got our bifurcation in the ratio of 2:1. Done? Yes. Now let's prepare partners capital account. But before preparing partners capital account, let us find the ratios. Let us find the ratios first. Okay. So let me just find it over here only. Partner old ratio. New ratio. See, because in this question they have given us both the old ratio and the new ratio, right? So straight away we can find out the sacrifice ratio. My sacrifice ratio, whether they have gained or lost, right? So D, B, M. So what is the old ratio? 2:1. So that would be 2 by 5, 2 by 5 and 1 by 5. Okay. What is the new ratio? New ratio we have found out over here, right? 5:5:3. So that will be how much? 5 by 10 plus 15. So the new ratio will be 5 by 15, 5 by 15 and 3 by 15. 3 by 15. See, always remember that whenever a new partner is admitted, his ratio will be at the end. His ratio will always be at the end, right? So the first 3 ratios are of the old partner. So whenever a new partner is admitted, his ratio will be at the end. Remember this. Clear? Okay. This won't be repeating again and again. So now sacrifice ratio. Find out. That would be how much? 5 3 is 6 minus 5 divided by 15 equals to 1 by 15. And over here, again same. 6 minus 5 by 15 equals to how much? 1 by 15. Then 3 by 5, 1 by 5. So 3 by 5 will be 3 minus 3 by 15, that will be 0 by 15. So that means these both persons or these both partners have sacrificed, whereas this partner has not sacrificed anything. He is not sacrificing any of the amount for the new partner. It is Mistry, I guess, right? Yes, partner's name is Mistry. Towards Mistry, he is not sacrificing any amount. Clear? So only two partners are sacrificing. So now tell me, if there is any goodwill entry passed, what the entry will be? The entry should be gaining partner's account debited to sacrificing partner's account. In my case, the entry will be what? New partner's name is Mistry. So Mistry's account debited to D's account to B's account, whatever that name is. For D, I think it was Dalal, and for B, it was, I think, Banerjee. Yeah, Banerjee. So the entry will be D's account, Mistry's account debited to Dalal's account to Banerjee's capital account. Clear? Now, what about the goodwill? Divide the goodwill now. What is the amount of goodwill? So, goodwill division. See, in this case, goodwill has been straight away computed and given to us of the firm. See, whatever the goodwill is given over here is of the firm. Sir, how can I tell it is of the firm? See, because nowhere it is mentioned that his share of goodwill is so much. Nowhere it is mentioned that his share of goodwill is so much. Right? Straight away they have given us that the value of the goodwill will be fixed at 15,000 rupees. That means it is the goodwill of the total firm. But we don't want the goodwill of the total firm. We want his share of goodwill. Whose share of goodwill? The new partners or the new incoming partners' share of goodwill. So how to find that out? Mistry's share of goodwill will be how much? 15,000 is the firm's goodwill into his ratio. What is his ratio? What is his ratio? How much is the amount he is receiving over here? Mistry is receiving 2 by 15th, right? 2 by 15th. So that would be 2 by 15 is equals to how much? Just check. I think 2,000 rupees. It's 2,000 rupees. So 2,000 is the share of what? Is the share of goodwill. That is to be adjusted with Mistry's account. Okay. How will this be divided between D and B? In the ratio of 1:1. In the ratio of 1:1. Not 1 by 15. Remember, please do not multiply this over with this value. This, if you want to multiply 1 by 15, multiply it with 15,000. But if you want to multiply it with 2,000 rupees, multiply the ratio of 1:1. That is 1 by 2, 1 by 2. Clear? Because we want a whole number of 1. Because 1 by 2 plus 1 by 2 will be how much? Will be 1. Will be 1. Clear? But if I multiply these both, what will happen? 1 by 15 plus 1 by 15 will be what? 2 by 15. It's not a whole number over here. It's not a single digit, right? Okay. Hopefully these basics are covered in maths. Okay. So now, D's share of goodwill is how much? 2,000 into 1 by 2. Whereas B's share of goodwill is equals to 2,000 into again 1 by 2. Clear? That will be rupees 1,000 and rupees 1,000. What is the journal entry that you will pass over here? What is the journal entry that you will pass over here? The journal entry will be gaining partners account debited. Who is the gaining partner over here? Who has been gaining profits over here? Mistry. Who has been admitted, right? Mistry's capital account debited to whose account? To sacrificing partner. Who is sacrificing over here? These both people, Dalal and Banerjee, are sacrificing. So to Dalal's capital account to B, Banerjee's capital account. So what are the values? Rupees 2,000 was the total value of goodwill, or Mistry's share of goodwill in the total firm's goodwill. And how will that be divided between these both? Rupees 1,000 and rupees 1,000. Clear? Clear how to pass the entry? Okay. Now let's prepare what? Now let's prepare capital account. So now I have prepared the partner's capital account over here, where D means Dalal, B means Banerjee, Malik and Mistry. The same way over here. Okay. All the amount columns are mentioned for 4 different partners. Okay. So one more thing that I missed from my side is that the question was pending. Okay. The second part of the question says this. The outstanding liabilities include 1000 rupees due to Mr. Sen, which has been paid by Mr. Dalal. Necessary entries were not made in the books. So, a partner named whom? Mr. Dalal, that is Mr. D. Mr. Dalal has paid a outstanding liability. How much was the outstanding liability over here? 1500, right? Out of that 1500, 1000 rupees was due to Mr. Sen, some outside party's name. Okay, we don't know who is he. So to that person we were payable. A liability was due. That liability has been paid by Mr. Dalal from his personal money. From his personal money. That means firm owes something to him. Firm will owe something to him. See, when a partner is paying on behalf of the partnership firm, that means firm should pay him, right? See, it was whose liability? In reality, it was the partnership firm's liability. But who is paying it? The partner is paying it from his own hands. So that means firm has to pay him something, right? Let us assume the firm is not paying him anything but increasing his capital. Can the firm do so? Yes, it can do so. So what the firm will do is it will increase its capital without bringing in any money, any more money by Dalal. The firm will assume that the partner's capital has increased. Which partners? Only Mr. Dalal's capital has increased, right? So he will increase the partner's capital account. That I will teach you in the partner's capital account now. Just have a look. Okay. So first of all, let's prepare partner's capital account. Now tell me, how will you open partner's capital account? Since this is an existing firm in which the partner is admitted, a new partner is admitted, that means we will have the opening balance of capital already. Where capital account balances are given to us, right? What are the balances? Rupees 12,000, 12,000, 5,000. So take the same. 12,000, 12,000 and 5,000. So 12,000 to D, 12,000 to B and 5,000 to Malik. What is the entry? By balance brought down. Why am I taking the credit balance over here? Why is the credit balance taken over here? Because we are in the partner's capital account and we know that capital accounts always have a credit balance. Any entry you pass on the credit side will increase the balance. Any entry you pass on the debit side will decrease the balance. Then going ahead, the next step would be to consider the profits or losses in the revaluation account. See, the profits and losses in the revaluation account will what? Increase the balance. The profits will increase the balance of partner's capital, whereas if there was any loss over here, it would have decreased the balance of partner's capital. But in my case, this question, what has happened? We have a profit on revaluation where my incomes are more than my expenses. My expense is less, whereas my income is more. Because of that, I am incurring a profit. So this profit will increase the partner's capital account balance. So 2520. So the entry would be by revaluation account. 2520. 2520 and the last part is what? 1260. 1260. Now next, what to do? Next, before goodwill adjustment, there is one more adjustment. So these all are done. So don't touch this. Here, Mistry shall bring 5,000 towards capital, it seems. So Mistry is bringing in capital. So whenever Mistry is bringing in capital, what is the journal entry? I have told you before. Remember, bank account debited to Mistry's capital account. Why the entry is passed? Bank account is debited because he is bringing in cash or bank, whatever it is. So the bank balance will increase. Whenever the bank balance increases, asset balance increases and it will be debited. Whereas partner's capital account will be created. Why? Because he is bringing in capital towards what? Towards his capital, it seems. Towards his capital. And whenever capital increases, we will credit the account. So I need to credit capital's account. So I will credit partner's capital account. On which side? On the credit side. By what? By bank account. Rupees, how much? Rupees 10,000, I guess. Sorry, rupees 5,000. Rupees 5,000. In which column should I mention the amount? Only in the column of Mistry. It is his capital, right? See, that there was no balance over here. Why? Because he's a new partner being entered. There will be no opening balance for him. Clear? Okay. Next, after this. Next, once that entry is done, so what else remains? The value of goodwill, keep it on hold. Keep it on hold. I will teach you what to do. General reserves will be transferred to partner's capital account. Okay. To which partner's capital account? I have told you before. Which partner's capital account? To only old partner's capital account. Why? Because whatever reserves you see over here belongs to old partners because they have been running the firm for so long, right? So whatever reserves were there were accumulated because of their own efforts, right? So why should I give the share to the new partner? He is coming in today. Why should I give him the profits of the old years? I won't give him. I will give this whole ratio to whom? To the old partners. In what ratio? In old ratio. In old ratio. So 2 is to 2 is to 1. So 6500 again divided by 5. Why 5? 2 plus 2 plus 1. 5 divided by 5 equals to 1300. Now into 2 equals to 2600. 2600. Then 2 equals to 2600. 1 equals to 1300. If you want to confirm, you can just add all these three and the answer will be 6500 if you want to check. Okay. Now what the entry will be? By reserves. By reserves. Why will this entry be passed? If I have to pass the entry will be a reserves account debited to partners capital account. This is the entry that was passed, right? For whatever the amount it might be. Why this entry is passed? See, I have told you that reserves are what? Reserves are part of capital. Reserves are part of capital. And whenever I need to reduce or pay off reserves to someone or reduce the or write off the reserves, the balance in the reserves will decrease. And whenever the balance in reserves decrease, that means my capital value is also decreasing, right? The capital is also decreasing. And whenever the capital reduces, we will debit the account. Yes. And coming to my partner's capital account, because the partners are receiving a share of reserves, whatever the reserves were there, they are receiving a part of it. If assume I had a small FD, okay, I am dividing it between the partners now. That means partners are gaining from it. Partners are gaining from it. Just like that in reserves also, there was a reserve which was divided to the partners now, to three partners, right? My whom? Dalal, Banerjee and Malik. These partners are receiving it. Because of that, their personal capital balances are increasing. Because of the increase in the capital balance, what happens? Increase in the capital balance, what happens? The partner's capital account will be credited, because when the capital increases, we will credit the account. Clear? This is the entry that we pass. Okay, then going ahead. What else is remaining? Goodwill adjustment. Yes, goodwill adjustment was remaining. So make the goodwill adjustment. Now look at the journal entry. Okay, let's not look at the journal entry. Okay, let's ignore the journal entry. Let us assume we don't know the journal entry. So now tell me, whenever the partner, the new incoming partner is giving us the goodwill, in that case, will the balance of the capital accounts increase or decrease of the old partners? Of the old partner, the capital balance will increase or decrease whenever they receive goodwill from the new partner. It will obviously increase, sir. Yes. So whenever there is an increase in the capital account and whenever there is an increase in the capital account, what will you do? Will you debit the entry or credit the entry? I will debit the entry. So in my partner's capital account, I will debit the entry of rupees 1000 towards whom? Towards D, and 1000 towards B. This we have computed here. Remember, we had computed the same over here. Remember the same thing I am writing over here again. Okay. Now while passing the entry, what to pass? See, we know that if the amounts are in the same column, same account won't be opened again. We need to open the corresponding, the opposite account. That is what? It is what in this case? It is by Mistri's capital account. If I have to open the journal entry once again, Mistri's capital account. Done? Okay. Now, on the other side, there is one more entry to be passed. Why? Because Mistri is losing some amount. See, since he is giving some amounts to the new partner, the old partners, he should lose something, right? He has brought in only money for the capital, but he has not brought in the money for goodwill. This idiot, whatever is there, should have actually brought in the money for goodwill also. But he is bringing the money only for what? Only for capital. So what we will do, we will deduct this 2000 rupees, whatever the share of goodwill was there, from his capital, and we will reduce his capital amount. That's what we will do today. Let's see what to do. So whenever capital value reduces, what to do? I will debit the account by what? Rupees 1000, rupees 1000. Now what the entry will be? To D's capital account, to B's capital account. We're good to go. If you look at the journal entry that we have passed, matching with this, yes, this is how you need to pass the entry. But remember, don't write the entry as that partner and pass the amount in the same column. It will make the entry wrong. Clear? So pass the amounts in the opposite columns always. Fine. See, this entry is to increase these two people's balance. This entry is to reduce Mistri's capital balance. Why? Because this idiot is not bringing any money for goodwill separately. He is bringing in only rupees 5,000 saying that I will divide goodwill. How will you divide goodwill? I will tell you what to do. Now find out the value of goodwill of, now find out the value of Mrs. Capital. Find out rupees 5,000 minus 1,000 minus 1,000. How much will remain? Only rupees 3,000. So that means his capital balance has decreased by what? Balance carried on rupees 3,000. So he had brought in rupees 5,000 as capital, but since he has not brought in any money for goodwill, what I am doing? I am transferring the same amount towards goodwill and reducing his capital balance to rupees 3,000 only. This is what I will do. If you are not bringing in money, I will take some money from your capital only and I will reduce your capital in the books. Simple as that. Clear? Okay. Okay, then going for the remaining partners. Any more entry to be passed? Any more entries? No loss, nothing. Okay, so let's look at the entries once. So this is passed. This is passed. This is a new ratio, so no need. Okay, this one was remaining, right? Outstanding liability was paid by whom? Paid by Dalal. Paid by Mr. Dalal. Mr. Dalal has paid some liability of the firm with his own money. So I need to increase his balance to pay off that liability. See, I will tell you what to do. Now pass the journal entry. Whenever a liability is paid off, pass the journal entry. What will you pass? The entry would have been outstanding liability account debited to bank account because I am paying off the liability. That is why the entry would be this. But is the firm paying the money? Is the firm paying the money? No. That means there will be no cash outflow, no cash or bank outflow. Yes, but I need to pass a subsequent entry. What will you pass it as? I will pass it as Dalal's capital account. I will pass the entry as Dalal's capital account. Why? Because I am showing that his balance has been increased. Dalal has paid it from his own hands, from his personal hands, which he should not do. So because of that, to compensate him for that, what will I do? I will increase his capital amount balance by what? Rupees 1,000 only. By rupees 1,000. So in my partner's capital account, on the debit side, what to do? Sorry, on the credit side, what entry to pass? By outstanding liability. Rupees how much? Rupees 1,000 is the liability. What is reduced? Right? See, if you have to see the entry, you can just verify the same. Clear? Okay. Now, close all the accounts. So we have already closed Mistri's account, so don't touch it. So remaining accounts you go on closing. So let's start with Dalal's account. So 12,000 rupees plus 2,520 plus 2,600 plus 1,000 plus 1,000 minus nothing. So that would be 19,120. Then going for B, 12,000 plus 2,520 plus 2,600 plus 1,000 minus nothing. So 18,120. Then last 5,000 plus 1,260 plus 1,300 equals to rupees 7,560. 560. Okay. Now, we are done with this also. Now what to do? So as per the question, they have asked us to prepare revaluation account, capital accounts and balance sheet. So we are done with capital account, we are done with revaluation account. So only remaining is balance sheet of the firm after admission of the Mr. Mistry. Now prepare balance sheet. My balance sheet is after admission. Just write on the dates also. Just write on the date on what date it was prepared. So we have liabilities, amount, assets, amount. Okay. Go on. So first of all, liabilities, trade payables. Was there any difference in trade payables balance? No revaluations are done, right? No revaluations are done. So straight away take 12,850. The next, outstanding liabilities. Is there any difference? Is there any difference? Yes, sir. There is a difference, right? Remember, 1,000 was already paid off. So how much remains? Out of 1,500, if 1,000 rupees is paid, how much remains? 500 remains. Then, is general reserve balance to be taken? No, sir. Why? Because general reserves are already divided between the partners. Remember, because the question had clearly told us that general reserves will be transferred to partners' capital account. So, the general reserve balance is 0. Then, capital accounts. Capital account. Now, Mr. Dalal, Banerjee, then Malik, and the last one person's name was Mistry. Okay. Now where will I get these balances? Where will I get these balances? In my partner's capital account. Whatever account I have prepared, open that account now. What are the balances? These are the balances. I just mark it for you. These are the closing balances of the partner's capital account that should be taken to my balance sheet. So 19,120. Just write it down. 19,120. Then 18,120. 18,120. Then 7,560 and 3,000. And 3,000 rupees. So how much will the total be? 19,120 plus 18,120 plus 7,560 plus 3,000 equals to 47,800. Okay, cool. Then let's start with the asset side. Remember, in the assets there are some revaluations done. Remember this, clear? First of all, we have land and building. Land and building. So is there any revaluation in the land and building? Yes, sir. Remember, the value was increased, right? 25,000 plus increase of rupees 5,000. So 25,000 plus 5,000 will be how much? 30,000 rupees. So 30,000 rupees over here. Then next, furniture. Furniture. Any increase or decrease in furniture value? Furniture. There was a decrease. There was expense, right? Of rupees 650. Decrease of rupees 650. So 6,500 minus 650. 6,500 minus 650. That will be 5,850. 5,850. Then next, inventory. Any changes in inventory? Yes, sir. There was a change in inventory. So go back to the revaluation account. Inventory. There was an increase of rupees 2,500. Right? Remember this part. Where is it? This part, there was an increase by rupees 2,500. So 11,750 plus 2,500. That would be 14,250. Inventory 14,250. Next, trade receivables. Trade receivables, there was a decrease because of what? Because of bad and doubtful debts by 10%. So going back to my revaluation account, provision for bad debts rupees 550, right? So now go back, trade receivables. I am writing the net figure, but in examination what you people should do is write down the full value of trade receivables minus provision for bad and doubtful debts. Write down the amount and write the amounts in total column. Okay, for these entries also, please write a small working note. In the brackets, write down this amount minus this amount, and I have got this amount. Please do not write the amount directly. I am writing it over here just for the sake of saving some time. Clear? So the amount would be what? 5,500 minus 550. That will be 4,950. 4,950. Then cash in hand, cash in bank. Is there any change over here? Let's see. Cash in hand, there is no change, right? Cash in hand, there is no change because nothing is being brought in cash by anyone. Rupees 140. Okay. Then after this, is there any change in the bank account? Yes, there is a change in the bank account. What's the change? Remember, he has brought in some money. Who has brought in? Mistry. Mistry has brought in some money in the bank account as a capital. Remember, rupees 5,000 rupees. So increase the bank account balance by rupees 5,000. So bank, how much was the amount? 960 plus 5,000. That would be 5,960. Check if the balance sheet tallies. Let's see. First of all, liabilities 12,850 plus 500 plus 47,800 equals to 61,150. 30,000 plus 5,850 plus 14,250 plus 4,950. 4,950 plus 140 plus 5,960. That will be 61,150. Done? Yes. So this is how we solve the whole question. Okay. A small adjustment just for the sake of understanding. See, in this case, whatever goodwill the partners have received, whatever goodwill they have received, that is D and B, they are not withdrawing it. They are keeping it as a capital in the business. But some questions might ask you that this goodwill whatever was received has been withdrawn by the partner. Now whenever withdrawal entry comes up, that means cash is going out of the business and partner's capital balance will also reduce. So just pass an entry over here on this side. On the debit side, pass an entry to bank account rupees 1,000 by D, 1,000 by B. This is whenever the goodwill whatever they receive is withdrawn by them, is withdrawn by the partners. Because of the withdrawal, the bank balance will reduce. So in the balance sheet, remember that bank balance should be reduced, and in my capital account, I should show a withdrawal entry by reducing the value of capital. And whenever the capital reduces, I will debit the entry. Remember, clear? Okay. Now let us start with the second illustration. A and B are partners sharing profit and losses in the ratio of 3:2. Let me just mark this. This is the old ratio. This is my old ratio. Now, their balance sheet as on 31/3/2022 is given below. Okay, so the liabilities and assets are given to us. Okay, fine. Let's see the adjustments now. On 1/4/2022, they admit C on the following terms. What are the terms? That C will bring in 50,000 as capital and 10,000 for goodwill for 1/5 of share. This is what his new share. Whose new share? The incoming partner's new share. And in this case, not like the old example, he is bringing 50,000 towards capital and 10,000 towards goodwill separately. So how much is the total amount that is bringing in? He is bringing in rupees 60,000 in the bank account. Remember this, clear? Okay. Whereas 50 will be retained as a capital and 10,000 will be divided between whom? A and B. In what ratio? In sacrifice ratio. Then the second one, provision for doubtful debts is made on trade receivables at the rate of 2%. Okay, fine. Inventories to be written down by 10%. Fine. Freehold premises is to be revalued at 2,40,000, plant at 35,000, furniture at 25,000, then office equipment at 27,500. So they have given us the new revalued amounts. That means this is the new value of what? Freehold premises. How much is it? 2,40,000. How much is the old value? 2 lakh rupees. That means it is increased or decreased? It is increased from rupees 2 lakh to rupees 2,40,000. Then goes for plant. The new value is rupees 35,000. Old value is rupees 40,000. So that means it is reduced from rupees 40,000. It is reduced to rupees 35,000 because these values are on what date? Are on this date. But these values given to us are on what date? On 31/3/2022. So that means these are old values. These are new values. These are new values. So remember, okay. Accordingly, you should increase or decrease and put it in where? In the revaluation account. Next. Okay, this is the new entry that you will be facing over here. Partners agreed that the values of the assets and liabilities remain the same, and as such, there should not be any change in their book values as a result of above mentioned adjustments. They have given us the adjustments, and now they are saying that there should be no change in the value of assets. How to do that? So we prepare something called as, now we will prepare something called as memorandum revaluation account. Clear? We will prepare something called as memorandum revaluation account. Clear? Now what we'll do, we will first of all make the changes in the value and then again reverse the values. See, whatever increase or decrease was there as per the question in the adjustments, that we'll do first, like the old question, same way, no changes. And then we will divide it between whom? Between the old partners. Then again we will reverse all the changes by reversing all the entries. That I will show you how to do. And then divide the profit or loss with all the partners, with all partners, including the new partner. In my case, including with C, A, B, C. Clear? Okay, let's do it. Wait. But first of all, what is the question asking us to prepare? You are required to make necessary adjustments in the capital accounts of the partners and show the balance sheet of the new firm. Okay. So we will also prepare memorandum revaluation account this time. Okay, let's see. Let's go on doing it. Okay. So first of all, provision for doubtful debts is to be made on trade receivables at 2%. So 2% of what? 2% of trade receivables. How much is 2% of trade receivables? 25,000 into 2%. How much is it? Rupees 500. Is it an increase? Sorry. Is it an income or expense? It is an expense. So on the debit side, 2 provisions for doubtful debts. Sorry. Provision for doubtful debts. Provision for doubtful debt. How much is it? 25,000 value of trade receivables minus into what is the value? 10%? No, sorry, 2%. That will be rupees 500. Okay, then inventory is to be written down by 10%. Written down by 10%. So by this much value it should be written down. How much is the value of inventory? Since it is a written down of an asset, I will decrease. Show it as a expense. So inventory account. How much? Inventories. Rupees 30,000 into 10%. That is rupees 3,000 decrease. Okay. Before going further, I want to show you something. See, sir, you are just going on passing the entry, not telling us the logic. I will tell you the logic. Where am I going? I will tell you the logic now. Now see, value of asset is decreasing. Yes, see, we know that inventory value is being reduced. Right? So what to do with this? See, as per the rule, whatever we have studied, the 5 entry, inventory is categorized as what? Inventory is categorized as an asset. And whenever the value of asset decreases, we will what? We will credit the account. So, to inventory account by how much value? By rupees 3000 is the decrease. Yes. Now, on the debit side, what to put? We will put revaluation account by rupees 3000. Check the entry with this matching. Is it matching? Yes. Now, what if the value of inventory was increased? Let us say the land value has increased. Okay, let us take one example. Let us take one example from the question itself. See, freehold premises has been revalued rupees 2,40,000. From rupees 2 lakh, it has been increased to rupees 2,40,000. There is an increase in the value of assets, and whenever there is an increase in the value of assets, there is an income, right? So, by freehold premise, how much is the value? Rupees 40,000. Why 40,000, sir? Because 2.4 lakhs minus rupees 2 lakhs, rupees 40 lakhs, 40,000. Sorry. Okay. Now the journal entry. Value of an asset is increased, and whenever the value of asset increases, we will debit the account. So, freehold premises account debited. To what? To revaluation account, because I am revaluing the assets, right? To revaluation account. How much is the value? Rupees 40,000. 40k. Simple. The same entry was passed over here. Yes, the same entry has been passed over there. Done. So this is the entries that will be asked as a form of journal entries. There are some questions in the textbooks which talks only about the journal entries required. Clear? Okay. So for that purpose, this is required. Fine. Then going on. So I will just mark. Okay, what is done? This is done. In this, freehold premises are done. Then next, plant by rupees 35,000. Okay. So plant at rupees 35,000. So the new value of plant is rupees 35,000. What was the old value? Was rupees 40,000. So that means the value has been reduced from 40 to 35. The value has reduced. So to plant rupees, how much? 40k minus 35k. How much is it? Rupees 5,000. Next. So plant is also done. I will just mark it. Plant is done. Next. Furniture rupees 25,000. So what was the old value? Rupees 20,000. From 20,000 the value has become what? Rupees 25,000. So that means the value has increased. So whenever the value increases, debit the account. Sorry, credit the account. By furniture account. What is the value? Rupees 25,000 minus rupees 20,000. Rupees 5,000. Okay. Next. Office equipments rupees 27,500. So what was the old value? Rupees 25,000. But what is the new value? Rupees 27,500. So now what to do? It's the increase. So again, by office equipments rupees 27,500 minus rupees 25,000. How much is the value? Rupees 2,500 is the value over here. Okay. Are we done with all the entries? Yes. So what to do with the last one? Fifth entry I will tell you what to do. But before that, close the revaluation account. How will I close this? By balancing it. Rupees 40,000 plus rupees 5,000 plus rupees 2,500 minus 500 minus 3,000 minus 5,000. That will be rupees 39,000. Rupees 39,000. Now what the entry will be? To partners capital account. Yes. Which partners capital account? Only old partners capital account. So who are the old partners? Mr. A, Mr. B. So A, B. What are the values? In what ratio should I divide it? In the old ratio. Only I can divide it. So 3:2. So again 39,000 divided by 5. Why 5, sir? 3:2. Right. The ratio is 3:2. So because of that, divide by 5 into 3 equals rupees 23,400. 2 equals 15,600. So the first part of the answer is done. The first part of the revaluation account is done. Now let's go to the second part. Now what to do? Since they have told us that the value of the assets should remain the same. I will again reverse all these entries. Now how to reverse this? Whatever entries you have debited, all these entries you can credit now. whatever entries were credited will be debited now. By this I will reverse whatever was past now. Clear? See, basically simple. See, this entry whatever was there, I will just reverse this now. That means freehold premise will be credited. So two what? Two freehold premises over here, because it was over here on the credit side. This will be two freehold premises now. Whatever entries I have passed before will be reversed. Ulta entry. That is it. So now do. Start with the credit side. So two freehold premises. So two freehold premises. Same amount, rupees 40,000. Then two what? Two furniture. Two furniture rupees 5,000. Then two office equipments. Office equipment rupees 2,500. Then on this side, on the debit side, sorry, on the credit side, buy provisions for what? Doubtful debts rupees 500. Buy inventory rupees 3,000. Then buy plant. Same thing, I just copy pasting it over here. Nothing else. Clear? Okay. Now what to do? Now again balance the revaluation account. Rupees 40,000 plus rupees 5,000 plus rupees 2,500 minus 500 minus 3,000 minus 5,000 will be equals to 39,000 rupees, sir. So again 39,000 rupees, but this time it is a loss on revaluation. See, whatever values we had over here is a profit on revaluation, but whatever value I am having over here is a loss on revaluation. Now coming to division part, always remember this. Whenever you are preparing a simple revaluation account, whatever profit or loss you have, that should be divided between the old partners only. But when you are preparing memorandum revaluation account, whatever reversals that you make over here should be divided between all the partners in new profit sharing ratio. What is the new profit sharing ratio? Do we have the new profit sharing ratio? We don't have it. Arey Baba. No, but I should divide it now. Okay. So by partners capital account between A, B and C. Between all the three partners I should divide it. Now sir, why to divide it between all the three partners? I will tell you the logic. See, this was belonging to the old partners. So I divided between the old partners. But now all the partners together are saying that whatever the profits and losses are there, or whatever the revaluations was there, should not be done and it should be kept as it is. The value of assets and liabilities should be kept as it is. Because of that, since all the three partners are agreeing to that, because of that, they say that all should divide the losses or profits, whatever is there. Okay. In this case, it was profit before, but it is a loss on the second time. So these two partners are benefiting. That is, how are they benefiting? It is left to you. I will leave the logic to you people. It's a simple thing. See, compare this amount and whatever amount you get over here. You will simply understand that the profit was more, but the loss will be less. Why? Because now it is being shared between three people. Now it is being shared between three different people. But it was between two people over here. Okay. Now, first of all, what do we need to find? We need to find the profit sharing ratio. Sacrifice ratio is not given. New profit sharing ratio is not given. But what is given to us? Only the ratio of new partner is given to us, right? C will bring in so much capital and goodwill for how much share? 1/5 of the share. So now remember the cases. Out of 5 cases, remember and put it over here. So what I will do is I will prepare a computation. Computation of new profit sharing ratio. What to do? So remaining profits after admission of new partner. After admission. 1 minus 1/5. Remember doing it. So that will be how much? 4/5. Compute it on yourself. That will be 4.5. Okay. Now this 4.5 will be divided between whom? Between A and B. In what ratio? Since there is no other ratios given to us, we will divide it between 3:2 ratio. So A will get how much? Out of 4/5, A will get 3/5 and B will get out of 4/5, he will get 2/5. What is 2/5 and what is 3/5? This ratio. The same ratio I have taken over here, 3/5, 2/5. Where did I get 4/5 from? From this part. The remaining value, whatever is there, see, out of 1 by 5 is taken by whom? By C. Remains how much? Remains only 4 by 5. Now this 4 by 5 will be divided between whom? Between A and B. In what ratio? In 3 is to 5. Sorry, 3 is to 2 ratio. Why? Because this is the ratio what we have as a base. Because of that. Now, what is the value? Into. So 4 is a 12 by 25. Then 4 to 8 by 25. So what is the new profit sharing ratio? My NP, new profit sharing ratio, will be equals to what? 12 is to 8 is to, the ratio is, of C is 1 by 5. So I have to convert it into 25. So 5 4s are 20. 5 5s are 25. So 5 by 25. So that will be 12 is to 8 is to 5. Now, coming back. So in the ratio of 12 is to 8 is to 5. So that will be total 25. 12 plus 8 plus 5 will be 25. So 39,000 divided by 25 equals to, into 12 equals to 18,720. Then 8 equals to 12,480. Then last value was 5 equals to 7,800. Okay. I will just total all of them. It should be equals to 39,000. So this is how the losses will be divided. And I told you the logic right before. See, 23,400 was the profit earned by A, whereas the loss borne by him is what? Only 18,720. So that means the difference figure, whatever is there, is the profit that he has made in between, and that is being borne by whom? By C. So now the next account that we will prepare is partners capital account. Okay. So before preparing partners capital account, what should we take care of? By what? Opening balance. So by balance brought down. What are the balance of A and B? As per the balance sheet, it is 2 lakh and 1 lakh, right? 2 lakh and 1 lakh. Then what else? By revaluation account. What is the revaluation account for? The income or the profits. This part. 23,400 and 15,600. 23,400 and 15,600. Then again, there are some losses to be shared. Remember, there are some losses to be shared. How much is that? 18,720, 12,480 and 7,800. On the other side, to revaluation account, 18,720, 12,480, 480, 7,800. 7,800. Okay, fine. After this, what else is pending? Okay, goodwill adjustment. Okay, before goodwill adjustment, the capital brought in by him. So by bank account, what is this for? He has brought in some money. Remember, see over here. He has brought in 50,000 towards capital and 10,000 towards goodwill. So how much total amount has he brought in? Mr. C, how much has he brought in? Rupees 60,000. So he has received how much? Rupees. He has brought in rupees 60,000 as a capital plus goodwill. Capital plus goodwill. Right? Okay. Now what to do? Now next is the goodwill adjustment. But for goodwill adjustment, do we have sacrifice ratio? No sir, we don't have sacrifice ratio. So what to do now? But we have new ratio. We have old ratio. Yes. So what we will do is, we will prepare a small schedule again. So partner's name. So partner name. Then old ratio. New ratio. Then we will have sacrifice ratio. What is the partner's name? A, B. What are the old ratios? 3:2, I guess. Right? Have a look at the question. New ratio was 12:8. So 12 by 25. 8 by 25. What is the formula? Old ratio minus new ratio. Remember, sacrifice ratio ka formula. Okay, so do it. So 25, right? So that will be 15 minus 12 by 25. And over here, it will be 5 to 10. So 10 minus 8 by 25 is equals to 3 by 5. 3 by 25 and 2 by 25. Clear? Just to confirm, what you can do is add these both. 3 by 25 plus 2 by 25. How much will that be? 5 by 25. If I divide 5 by 25, how much will that be? 1:5 or 5 by 25. That is my C's new ratio. Clear? So that means we have correctly computed the sacrifice ratio. The ratio is what? the sacrifice ratio is equals to 3:2. Sir, this is exactly same to the old ratio. Yes, that's what I want to tell you. See, whenever only old ratio is given to you and new partners new ratio is given to you, in that case generally the sacrifice ratio will be equals to my old ratio. So you can straight away compute the sacrifice ratio. Okay. Fine. Now, what is the amount of goodwill? What is the amount of goodwill? The goodwill is rupees 10,000. Divided between whom? Between A and B. Why? Because they are sacrificing in the ratio of 3:2. So now let's pass the journal entry first of all. What is the journal entry? Sacrificing, no, gaining partners capital account debited to sacrificing partners capital account. Who is gaining over here? Mr. C is gaining. So C is capital account debited. Capital account debited to who is sacrificing over here? Mr. A and B. So A's capital account debited to B's capital account debited. Sorry, not debited. Sorry. Capital account. Okay, done. Now, what is the amount of goodwill brought in? Rupees 10,000. Rupees 10,000 was the capital. Sir, should I multiply this with the new partner's profit sharing ratio? No. Why? Because in the question, whatever 10,000 rupees goodwill they have given is what? Is the goodwill brought in by the partner. This is not firm's goodwill. This is his own goodwill share. So I do not multiply it again with 1/5. In the previous question, whatever goodwill was given to us was a firm's goodwill, not his own goodwill. Right? So I multiplied the new profit sharing ratio. But in this case, the question straight away gives us the share of goodwill of new partner. So do not multiply the profit sharing ratio with rupees 10,000. Please do not do it. So now 10,000 into what? In what ratio? In sacrifice ratio. That is 3:2. So 3:2 is how much? I will straight away do it. Mental calculation. People with smart brains. So that will be 6,000 and 4,000. Now divide this. How will I do this? Since the new old partners are receiving the goodwill, their balance of capital will increase, and whenever the balance of capital increases, I will credit the account. Remember? Okay. So in this rupees 6,000, rupees 4,000 to what account? By C's capital account. And on the other hand, C will lose the capital. See, out of rupees 60,000, 50 was what? Capital, and rupees 10k was what? Goodwill. So this 10k I should reverse right now. So how will I reverse this? I will reverse by passing an entry on the other side. For rupees 6,000, for rupees 4,000. What the entry will be? To A's capital account, to B's capital account. Those people who want to mug up, to A, to B, right? If I have to open the journal entry, to A's account, to B's account, and again over here by C's capital account of C is debited. Clear? This is how you pass the entry. Now what else is remaining? Anything else remaining to be adjusted? Nothing, I guess, right? Okay, balance the accounts now. First of all, I will do C account. So 60,000 minus 7,800 minus 10,000. The balance is what? 4,200. So 42,200. Then 2 lakh, that is A's, plus 23,400 plus 6,000 minus 18,720. That will be rupees 2,10,680. Then 1 lakh plus 15,600 plus 40,000 minus 12,480. Sorry, my bad. Again, once I will do for B, 1 lakh plus 15,600 plus 4,000 minus 12,480. That will be rupees 107,120. Right? This will be to balance carried on. Okay, these are the balances that will be carried forward to the balance sheet. Now let's prepare balance sheet. Now I won't prepare the balance sheet once again. Okay, it is simply time consuming because see, the question clearly says that partners have agreed that the values of assets and liabilities will remain the same, and as such there should be no change in the book values as a result of the above mentioned adjustments. So for above mentioned adjustments, there should be no changes in the value of assets and liabilities. So that means whatever assets and liabilities I have, there is no change in the value. Where will the changes be? I will tell you where the change will be. One, the capital account balance will change. Why? Because I am preparing the capital account newly. Because of that, the capital account balance changes. and I will have C also with me, right? So write down the new balances of capital accounts. So that will be 2 lakh, just mark this, this, and this. 2,10,680, 10,680, then next 107,120, 7,120, then 42,200, 42,200, 200. How much will that be? Just check. 210,680 plus 107,120 plus 42,200 equals to, this is the total will be rupees 3,60,000. Okay, do not consider this. The total of all the capitals. Then what else changes on the asset side? Tell me. What value will change on the asset side? See, these values won't change. Why? Because the question is clearly saying us that, warning us that no value should be changed after admission, just like old question. Because I am preparing what? I am preparing memorandum revaluation account and not only revaluation account, just like the previous question, right? So now that means 1, 2, 3, 4, 5, 6, these values won't change. What about the bank account? Will this change? Yes, it will change. Why? Because Mr. C has brought in some money in the bank. Remember, rupees 60,000 has been brought in. So because of that, what should I do? I will add rupees 60,000 to the bank account. How much will the new balance be because of this? 10,000 plus 60,000. That will be rupees 70,000. That means what are the new balances of the balance sheet? Just check. So on the liability side, 50,000 plus 3,60,000. How much will that be? Rupees 4,10,000. 4,10,000. And on the asset side, rupees 2 lakh plus 40,000 plus 20,000 plus 25,000 plus 30,000 plus 25,000 plus 70,000 will be 4,10,000. Got it? So my balance sheet has been tallied on the both the sides. See, I am not changing the values only because the question is clearly saying that value should not be changed. And how will you adjust this? By preparing something called as what? Preparing something called as memorandum revaluation account, where what you will do, you will first of all prepare it as just like a simple revaluation account. This is the first step. Then subsequently what will you do? You will reverse all the entries. Whatever debit was there, you will credit it, and whatever credit was there, you will debit it. And this time you will divide it between whom? Between all the partners. Between all the partners. In what ratio? In new ratio. But before that, how will you divide this? Just like your old revaluation account. How will you divide this? In the old ratio. In the old ratio. Clear? Remember this step, okay? Please do not forget this step. I think there are not much questions in your textbooks. I think there are only 1 or 2 questions in your textbooks. One question I have solved it, and second question is the first question in your test journals. Please try to solve it. Clear? So continuing with the next part, that is illustration number 11. So alpha and beta were partners in LLP, namely Metachem LLP, sharing profit and losses equally. So that means what is my old ratio? It is 1:1. Before admission, the old ratio was 1:1. Okay, then continuing. So the balance sheet of Metachem as on 31st March 2022 is given to us. That is, liabilities and assets are given to us. Fine. This is something new. Alright, let's see what to do with this. Okay, next, the adjustments. They agreed to admit Gamma as a partner from 1st April 2022. See, the balance sheet is given for 31st March 2022, and on the next day itself they have admitted what? Whom? Gamma, on the following terms. He shall have 1/6 of share in the future profits. That means new PSR of Gamma is how much? 1/6. Remember this. Clear? Remember this. Next, new profit sharing ratio is what? 3:2:1. So the new profit sharing ratio is given to us as 3:2:1. Whom does 1 belong to? Whom does 1 belong to? To Gamma. Remember this, okay? Now, he shall bring in 2,50,000 as a capital. As capital. Goodwill of the firm is given over here. In this case, goodwill of the firm is given. How much? Rupees 3 lakhs. Fine. So nowhere anything is mentioned regarding how much amount is being bought in by the partner towards goodwill, because only 2,50,000 belongs to capital. That means we will take out some amount. We will take out some amount as a goodwill from the capital itself. Okay. Now let's see what to do. So factory building is appreciated by 20% and inventory is revalued at 70,000 rupees. Okay. So now what I will do is, I will just order to save some time, I will make the amendments here itself. Okay. Let's see. So factory building has been appreciated by 20%. So from 4,78,000, what is the new value? 4,78,000 plus what? Plus what? 20% will be 5,00,000 73,600. Then next. So this is done. Then inventory is to be revalued at rupees 70,000. See, there's a difference between at and by. Okay, English grammar. At means this is the final value of inventory. By means they have given you the difference amount. By what amount has it increased? ಎಷ್ಟು amount is ಹೆಚ್ಚಾಗಿದೆ. Clear? So rupees 70,000. So the value of inventory is how much? The new value is rupees 70,000. Clear? Okay. Now next. Machinery is being appreciated by 20%. So machinery has been appreciated by 20%. So from 3,41,000 it has increased by what? 20%. So the new value will be 4,09,200. 9,200 the new value. Clear? Okay. Next. Office furniture revalued at rupees 50,000. This is the new value of furniture. So that means from 55,850 the value is how much? 50,000. Change the color. Rupees 50,000. Okay. Next. Trade receivables 3,210 are bad and 5% to be provided as doubtful debts. Okay. Now what I will do is, out of this whole amount of trade receivables, bad debt is how much? 3,210. That means the remaining amount of debtors is how much? 1,43,210 minus 3,210 is equals to how much? 1,40,000. So out of 1,40,000, the amount is to be classified as what? Classified as doubtful debts. Provided for, right? So this is the provision for bad and doubtful debts. What is the value? Rupees 1,40,000. How did I get value of rupees 1,40,000? Rupees 1,43,210 minus 3,210. Final accounts. Remember final accounts. Okay. Into what? Into 5%. That's equals to 7,000. Then next. So this part is also done. There is no actual liability towards workmen. Where was the actual liability? This. Okay. What to do with this? I will tell you later on. Okay. So we will keep this one pending. So we are done with all these three entries. Okay. Good. Now let us prepare what? Let us prepare revaluation account. Revaluation account. That is debits, credit. Okay. Going on. Furniture, sorry, the factory building, the value has been increased, right? From 4,78,000, if I have to zoom it in, from 4,78,000, the value has increased to 5,73,000. How much is the difference? 5,73,600 minus 4,78,000, that is rupees 95,600 rupees. Whenever there is an increase in the asset, it is an income to us. So therefore, on the credit side, by factory building, please write the working note clearly. I am just skipping it right now because I have shown you how to do it in the previous questions. Then next, plant and machinery. From 3,41,000, the value has increased to what? 4,09,200. So that means it has increased. By how much? 4,09,200 minus 3,41,000. 3,41,000 equals to 68,200. So what is the plant and machinery? By plant and machinery account, 68,200. Next, office furniture. So from 55,850 it has reduced to what? Rupees 50,000 rupees. That means it has reduced. That is a loss. So on the other side, to what? Furniture. 55,850 minus 50,000. That is 5,850. 850. Then inventory. From 77,740 it has been reduced to what? 70,000. So it has reduced by what? Rupees 77,740 minus 70,000 is equals to 7,740. To inventory 7,740. 7,000. Any changes? Okay. Bad debts, trade receivables and bad debts, right? So obviously the bad debt will be an expense. So 3,210. Then to provision for bad debt. How much? rupees 7,000. We have already computed both the values over here. Remember? Yes. Next, what to do? Next, finalize this account. 2 or by, let's see. So 95,600 plus 68 200 minus 5850 minus 7740 minus 3210 minus 7,000 equals to 1,40,000. 1,40,000 to what? To partners capital account. To partners capital account, right? So what are the partner names? To be shared between whom? To be shared between old partners only. Old partners only. Remember, in this question they have nowhere mentioned that the balances after the admission should remain the same before the adjustments. Nowhere they have mentioned the lines, right? So we will prepare only revaluation account and not memorandum revaluation account. So therefore, whatever the changes are there will to be whatever the profits or losses are there because of the revaluation will be shared between old partners only. So what is the ratio between old partners? It is equal partners. So 1:1. So therefore 1,40,000 divided by 2 rupees 70,000. So alpha and beta. So 70,000 each. That is equal share. Clear? Now let us prepare what? Partners capital account. Now how to prepare partner capital account? Opening with what? Opening with what? Opening with what? Opening balances of capital. So that will be by balance brought down. So for alpha and beta, what are the balances? Look at the balance sheet. Balance sheet. Rupees 3 lakh and rupees 2 lakhs. Right? So rupees 3 lakh and rupees 2 lakh. Then by revaluation account, remember there was a profit on revaluation. Remember rupees 70 and rupees 70. Where did I get the values from? From here, sir. Forgot. Rupees 70 and rupees 70. What, man? You people are like forgetting again and again. Then after this, goodwill division. Okay, before goodwill, how much is the capital brought in by this person, this idiot, Gamma? How much has he brought in? Rupees 2,50,000 towards capital, right? So what? I should increase his capital value. By how much? By bank account. How much is the value? Rupees 2,50,000. Has he brought in anything for goodwill? No, sir. In this question, he has not brought in anything. So what will we do? We will take out some money from this amount only towards goodwill and reduce this value of capital, just like we did in the first question. Okay. So now what we should do? So we have been given with the value of goodwill of the firm, but do we know his share of goodwill? Yes. How to find it out? So Gamma's share of goodwill, how much will that be? Equals to rupees 3 lakh into 1/6. Why 1/6? Because 1/6 was the new profit sharing ratio. Remember, new profit sharing ratio of whom? Of the new partner. So that will be how much? 3 lakh divided by 6. Rupees 50,000 is the share of goodwill of the new partner. But also what do we need? We need sacrifice ratio. Do we have sacrifice ratio? No, sir. We have only what? We have the new profit sharing ratio and we have the old ratio. So can we find the sacrifice ratio? Yes. Find sacrifice ratio. So what is the formula for sacrifice ratio? Sacrifice ratio is equals to old ratio minus new ratio. So the formula will be partners, then what is the name? Old ratio, new ratio, and we get sacrifice ratio, right? So partners name is alpha, beta. So what is the old ratio? 1/2, because they were equal partners. What is the new ratio? I think 3:2:1, right? So 3/6, 2/6, 3/6, 2/6. Now tell me what is the sacrifice ratio. So if I equate this, so 3 minus 3/6, that will be how much? 0/6, which is equivalent to 0. Then over here in the second case, 6, 3. So 3 minus 2/6 equals to 1/6. If you see, for Mr. Alpha it is 0. That means he has not sacrificed anything. Towards whom? Towards Gamma. He was like, मैं नहीं दूंगा, मैं profit नहीं दूंगा. But this guy, beta has transferred what? Has sacrificed some ratio towards towards gamma, right? So therefore whatever sacrifice he has done is equals to the new profit sharing ratio of gamma. So now what to do? Now I need to pass the journal entry. How to pass journal entry? The journal entry will be gaining partners capital account debited to sacrificing partners capital account. So therefore who is gaining over here? Gamma is gaining, right? Gamma's capital account debited to what? To what? To sacrificing partner. Who is sacrificing? Only Mr. Beta. Mr. Beta is sacrificing over here, right? So Mr. Beta's capital account debited. Sorry, capital account credit. Capital account. What is the value of goodwill? What is the value of goodwill? Is it rupees 3 lakh? Is it rupees 3 lakh? No sir. Why not rupees 3 lakh? Because this is the firm's goodwill. This is firm's goodwill. But we need what? Gamma's share of goodwill. That was rupees 50,000. So divide 50,000 between these two people. Between these two people. Okay. Now coming to journal entry in the partner's capital account. So coming to partner's capital account. Okay. Since beta is receiving the goodwill, his capital balance will increase. So by in beta's column rupees 50,000 by what? By gamma. Gamma's capital account. And on the other hand, gamma's value will reduce. Because why? Because he has not brought in anything towards goodwill separately. Only 2,50,000 rupees he has brought in. Only 2,50,000 rupees he has brought in towards what? Towards capital. So what we will do? As a punishment, we will reduce the value of the goodwill capital by rupees how much? By rupees 50,000, because it was his responsibility to compensate whom? To compensate beta. Did he compensate by bringing money? No sir. So what we will do? We will reduce his value. We will reduce his value from the capital itself. So to what? To gamma. To gamma's capital account. 50,000 rupees. Okay. Now, anything else pending? Just have a look at the balance sheet. Okay. In the balance sheet, we have general reserve of rupees 1,80,000. What to do with this? Remember the theory part I have told you that whatever reserve is there in the balance sheet should be divided between who? Between the old partners. Why? Because they have put in their sweat over here to earn this much of a general reserve. General reserve they have made, right? Because by earning for so long. Now if new partner comes and take it away, what happens? Simply the efforts they have put is into a vain, right? Because of that, I will divide this between whom? Between the old partners. In what ratio? In old ratio. So what is the old ratio? Equal partners. So because of that, 1,80,000 divided between two people. So that will be by general reserve. Rupees 1,80,000 divided by 2. That will be rupees 90,000 each. Rupees 90,000, and gamma won't receive any share out of it. Then what else? Regarding the workman compensation, they have mentioned something. Remember, see this. There is no actual liability towards workmen. Then why the hell are we maintaining this fund? See, workman compensation fund is something which is maintained so that tomorrow if an employee incurs some losses because of some damages or something falls upon him, then he has to put some medical expenses. So for that expenses, we maintain this reserve, workman compensation fund. So I have to provide some compensation to the workmen who are working for me. But if there is no liabilities as such, today, can I dissolve this? Yes, I can dissolve this. Now how to dissolve this? This was taken out from what? From the profits of the partnership firm. This was taken out from the partnership firm's profit. Actually, the profits of the partnership firm belongs to whom? To the partners, to the old partners, actually, right? So because of that, this fund should be transferred to the capital of both the partners. In what ratio? In 1:1 ratio. So how will I do that? So again, going to the ledger account of the partners by workmen compensation fund. How much was the value? Rupees 60,000. So divide equally between both the partners, rupees 30,000 and rupees 30,000. Now what to do? Now balance the account. Let's see. So to balance brought down, carried down. CD before BD. So rupees 3 lakh plus 70,000 plus 90,000 plus 30,000 is equals to rupees 4 lakh 90. 2 lakh plus 70,000 plus 50,000 plus 90,000 plus 30,000 is equals to rupees 4 lakh 40. Then the last partner, Gamma, 2 lakh 50,000 rupees minus 50,000 rupees. It will be rupees 2 lakh. Now what to prepare? We will prepare the balance sheet. Before that I will just mark the values that this will be taken to where? These values will be taken to the balance sheet on the liability side in under what? Under capital account. Now, so now let us prepare the balance sheet after what? After admission. After admission. Okay. So now start. First of all, liabilities. Start with capital. So capital. Do you have the balances of alpha, beta, and gamma? Do you have the balance? Yes, in the partner's capital account. 4 lakh 90, 4 lakh 40, and 2 lakh. 4 lakh 90, 4 lakh 40, and rupees 2 lakh. So total 4 lakh 90,000 plus 4 lakh 40,000 plus 2 lakh. That will be rupees 11 lakh 30,000. Okay, then after this, general reserve was cancelled off, right, by transferring it to the capital account. Then again, same goes for workmen compensation fund. It was also transferred to the capital account. Then term loan from IDFC Bank. No differences was made. Term loan rupees 2,78,000. Then trade payables, there was no changes, so it remains the same. Trade payables rupees 1,22,000. Then coming to my assets, okay. I have mentioned the new values over there itself, right? So factory building rupees 5,73,600. 5,73,600. The next, plant and machinery 4,09,200. Plant and machinery 409,200. Then office furniture rupees 50,000. Then inventory rupees 70,000. Trade receivables rupees. Now what about trade receivables? See, there are some adjustments. Remember, bad debt was adjusted, and after that some provisions were made. So I am going to write the net figure, but in examinations what you need to do, write this value minus bad debts minus PBD. Okay, you should clearly mention the same and write the amount in the outer column. I will do 4,32,210 minus bad debt 3,210 minus provision for bad debt 7,000. That will be how much? 1,33,000. 1,33,000 rupees. Then after this, what else? Bank account. I think in the question they have asked us to prepare bank account, right? Bank account. Let's prepare bank account. A simple small bank account. Puddusa. Bank account. Opening balance of bank will be on the debit side. So, to balance brought down. Rupees how much? Rupees 44,200. Yes. 200. Any other debits or credits? Remember, one debit was there. What? Of amount brought in by the new partner towards capital. Rupees 2,50,000. So, to whose capital? Gamma's capital account. Rupees how much? 2,50,000 rupees. Okay, so now write down the closing balance. By balance carried down. That is my balancing figure. 2,50,000 plus 44,200. That will be rupees 2,94,200. So take the same figure. Take the same value to what? To the balance sheet. 2,94,200. 2,94,200. sorry, not this is the revaluation account over here. 2,94,200, right? So 4,200. Okay. I think all the entries are done. Let's try to balance the balance sheet now. So start from liability side. 11,30,000 plus 2,78,000 plus 2,22,000 equals to what? 15,30,000. 15,30,000. 5,73,600 plus 409,200 plus 50,000 plus 70,000 plus 33 plus 2,94,200 equals to. And my balance sheet is tallied. Right? My balance sheet is tallied. So by this I end this question also. Then going ahead. Look at this question. Illustration number 8. A and B are partners with a capital of rupees 7,000 each. They admit C as a partner for 1/4 share. I will just mark this. For 1/4 share in the profit of the firm. Okay. C brings in 8,000 as his share of capital. Gives the necessary journal entries for the entry of goodwill. Okay. Now, sir, here they have not given us what is the value of goodwill brought in by the partner. Have they given us? No. They have given us only 8,000 rupees, which was towards what? Towards share of capital. Okay. Second thing, either they should give us the firm's goodwill. Have they given us the value of firm's goodwill over here in the question? Just have a look at the question. Just have a look at the question. Nowhere it's given. So what to do? So in this case, we should find something called as hidden goodwill. There's a goodwill hidden over here. Let's see how to find it. Okay. See. What is the capital brought in by? Capital brought in by partner, the new partner, that is C, brought in by C. How much is it? Rupees 8,000. What is the share of profit that C is getting for this much capital? For 1/4. That means, can I find the value of total capital? Total capital of the firm after his admission will be 8,000 into 4 by 1. I am reversing this 4 by 1, 1 by 4 into 4 by 1. By reverse computing, I can find what? I can find the total value of firm's capital. That is rupees 32,000 is what? Firm's total capital, not goodwill, total capital of the firm. Now I need to find goodwill. Sir, how to do it? I will tell you. Now add all the capitals. Total of capital of partners. Let's see what do we get. Is equals to 7,000 rupees each. See, as per the question, both A and B have 7,000 rupees each, right? So 7,000 plus rupees 7,000 is equals to plus what? Plus this guy's capital. How much is it? Rupees 8,000. So plus 8,000. How much will that be? 7,000 into 2 plus 8,000. That will be rupees 22,000 rupees. Okay. So that means total capital after adding the partner's capital is 22,000. But if I just reverse compute the value using the capital of the new partner, it will be 32,000. That means after his admission, the firm's capital should be increased to what? To rupees 32,000. But there is a difference over here, sir. There's a difference between these both values, right? What is the difference? This difference will be called as hidden goodwill. So my hidden goodwill will be equals to 32,000 rupees minus 22,000 rupees. That will be rupees 10,000. Clear how to find the value of goodwill? Yes. So this goodwill, again the same thing. This is the firm's goodwill. This is firm's goodwill. Remember, this is what? This is firm's goodwill. Clear? This is firm's goodwill, not the partner's goodwill. Then what should I do? 10,000 into his share. What is his share? 1 by 4. That is how much? 10,000 divided by 4 equals to rupees 2,500 is what? C's share of goodwill. Just like we used to compute for the old questions. Right? In the old question, they used to give us this directly. Firm's goodwill directly. But now I am finding it on my own. How? By comparing the capitals after and before admission. After and before admission, I am comparing the capitals. See, this is the capital before admission. Right? Using simple capital of the new partner. This is after its admission, depending on the ratio of profit given to him. Depending on the ratio of profit given to him, depending on the capital that is he has brought in. Clear? By reverse computing, I get 32,000. But in actual, the capital, the total capital of the firm should be only rupees 22,000. But there is a difference in these both values. That means the difference will be what? The hidden goodwill. So now I divided the hidden goodwill, that is rupees 2,500. Now what to do? Now divide it between the partners. So since nothing is given to us, I will assume that just a minute. So I will assume that the sacrifice ratio is in the equal ratio. See, in the question they have given nothing about the old ratio, new ratio. So we will assume that the partners are sharing the profits in the equal ratio. So what the journal entry will be? The journal entry will be what? Gaining partner account debited, that is cease capital account debited to what? To sacrificing partner. Who are sacrificing? Mr. A. A's capital account to B's capital account. So the total value of goodwill is rupees 2,500 divided by 2. That will be how much? So each partner is getting rupees 1,250 as a capital. Okay. So I won't be solving a new question on this separately because this is a simple question. So what you can do is you can refer illustration number 3. In illustration number 3, they have given a full question using the same specific adjustment. The sentence might change, but if in the question, now sir, how will I find out if the hidden goodwill is there or not? So they won't give you the capital brought in by the new partner. They will not give you the firm's goodwill also. If both of them are not given and they tell you that please give the necessary journal entry for recording the goodwill, that means you need to find out the goodwill. This is the hint that you need to find the goodwill on your own, which will be called as what? Which will be called as hidden goodwill. Clear? Okay. Moving ahead. Now look at question number 2. That is from your test your knowledge question number 2. Okay. See, this question I am not going to solve the whole question. Okay. Revaluation account, partner's capital account and balance sheet is your responsibility. I will only prepare the working notes and the journal entries for you people because this is the one question where I will be solving the journal entries also. Clear? Fine. Because see, whatever the revaluation account and the partner's capital account and the balance sheet is there is a regular, really simple ones. Okay. So please don't refer the answer and just directly go on solving because in the answers they have continued the part. Clear? So look at the question. Gopal and Govind are partners sharing profit and losses in the ratio of 60:40. See, I can take this as what? As 60% and 40% also. If you want to take it, you can take it as 60% and 40%. So why? Because these both add up to what? 200. These both adds up to 100, right? Because of that, you can take it as 60% and 40% also. So what is this? This is my old ratio. Then the firm's balance sheet as on 1st March 2022 was as follows. So liabilities are given, assets are given. Nothing abnormal items given over here. Then going ahead. Due to financial difficulties, they have decided to admit Guru. Okay, these were two partners, Gopal and Govind. They are admitting whom now? Guru. As a partner in the firm from the 1st of April 2022 on the following terms. What are the terms? Guru will be paid 40% of the profits. Now, see, because of this 40%, what to do? Change this to this. Clear? Change 60:40 to 60% and 40%. Both are one and the same. There is no difference in that. Clear? So 40% of the profit. This is what new profit sharing ratio of NPSR of Guru or the new partner is 40%. Then going ahead. Guru will bring in cash of rupees 1 lakh as capital. Cool. It is agreed that goodwill of the firm will be valued at 2 years of purchase of 3 years normal average profits of the firm. So I need to find out the goodwill myself. This is the hint that I need to find out the goodwill myself. How to find it out? Remember the average method we had followed over there. Using normal average profits of how many years? 3 years with 2 years of purchase. With 2 years of future purchase, I need to find out the goodwill. And Guru will bring in cash in his share of goodwill. So now what we need to do is, we need to find out the value of goodwill. Find out Guru's share of goodwill. What will Guru do? Along with rupees 1 lakh as capital, he will also bring in goodwill as in cash form. So basically he will bring in 1 lakh as capital plus goodwill in cash. Remember this, clear? Okay. It will also be decided that the partners will not withdraw their share of goodwill nor will the goodwill appear in the books of accounts. So partners are not going to withdraw the goodwill share, or they are not at all going to show it in the books. Then how to pass the entry? Remember, gaining partners account debited to sacrificing partners capital account, same entry will be passed here also. So whenever they say goodwill will not appear in the books, you need to pass that entry. But sir, what if this is not given? Then also you need to pass the same entry. The entry won't change. Whatever the question might be, in the current partnership accounts, you should not open goodwill account. Clear? Okay. The profits of the previous 3 years are given to us, were as follows. Okay. So 1, 2, 3 is given to us. Wait, I will not going to read this. Wait for some time. Then it was decided to revalue the assets for the previous financial year up to these values. Okay, we will revalue them. Then the new profit sharing ratio after the admission of Guru was this much. So I can write it as 35% is to 25% is to 40%. If you see, all this adds up to what? 100%. If you want to check, you can just check. Then what are they expecting from us? Pass the journal entries on admission, show the goodwill calculation, prepare revaluation account, partners capital account, and the balance sheet as on 1/4/2022 after the admission of Guru. Okay. So I will prepare journal entries on admission and show goodwill calculation. Remaining things are to be done by you. Fine. Don't worry, you people are really capable of doing it. I have trust in you people. मेरे को आप पे भरोसा है. So now let's start. First of all, let's compute what? Let's compute goodwill first of all. For goodwill computation, they have given us what? 3 years profit, right? But now there's some adjustment. See, remember the concept of goodwill in the second chapter, what I've discussed, how to find out the value of goodwill when average profit method is used. We need to find out something called as what? Something as what? Future maintainable profit. That means in future, if I am ignoring all the non-recurring expenses or incomes, what will my profit be? So what I will do is, I will just prepare a working note here itself. So, computation of average profit first of all. Computation of average profit. For how many years I should compute? For 3 years. Why? Because the question clearly says that 3 years of normal average profit. Using that, I need to find out goodwill value for 2 years of purchase. Right? So, start. Write down the years. I just mentioned particulars over here. Particulars year 2020, 2021, then 2022. Okay, start. Profits, which is given to us already. How much is the profits given to us? So read the first line. For the year ended 31st March 2020, profit was rupees 20,000. So straight away, आँख बंद करके profit amount लिख लो. 20,000 rupees. Then next. For the year ended 31st March 2021, the loss was rupees 80,000. So for the second year, it was a loss of rupees 80,000 rupees. Then for the year ended 31st March 2022, the profits was rupees 1,05,000. Again, the profit was rupees 1,05,000. This is what is given to us. But now, read the sentence further. So profit was 20,000 rupees for the first year. Then it includes this amount of rupees 20,000 includes what? Includes insurance claim received of rupees 40,000. Now tell me, for every year here onwards, will I receive insurance claim? No. That means this insurance claim, whatever is received, is a non-recurring income that I have received. In which year? In the year 2020. In the year 2020, I have received an insurance claim which is non-recurring. That means this will not continue here onwards. So what I will do? I will deduct this. I will do some adjustments over here now. Adjustments. Now how will I adjust this? See, insurance claim, whatever we have received, is an income to us. But will this income continue, sir? No. In the future, this income will not continue. So what I will do? I will reverse this income by rupees 40,000. I have reversed the income over here in the first year. Then going ahead, in the second year, what has happened? There was a loss of 80,000 rupees. Okay, fine, no issues. This rupees 80,000 loss includes voluntary retirement compensation paid for rupees 1,10,000. That means I have incurred an expense for what? For voluntary retirement. For voluntary retirement, I have incurred an expense. How much? For rupees 1,10,000. Will I pay voluntary compensation each year? Every year will I pay it? No. There will not be employees who will retire year on year. Right? That means this is also a non-recurring item. So to find out the future maintainable, how much profits can I maintain in the future on a regular basis? I should add it back because it was an expense. So I am reversing it. But to reverse it, I should Add it back. How much? Rupees 1,10,000. Okay. Then next. In the last year, profit of rupees 1,05,000 rupees. Okay. This includes profit of rupees 25,000 on the sale of assets. So that means there was some assets sold on which we have earned a profit of rupees 25,000. Now you tell me, sir, will we sell the assets year on year? For each year we will go on selling our assets. What, we are mad or what? No, right? So that means this profit is a non-recurring profit which will not be earned each year. Because of that, this will also need to be reversed. Profit, whenever I reverse, it will be a expense. So reverse rupees 25,000. Now compute the revised profit figures. Revised profits. Rupees 20,000 minus 40,000 will be rupees 20,000 in negatives. This will be a loss. See, from profit we have been in the loss now. Okay, for next year, 80,000 negative 80,000 plus 1,10,000. So that will be rupees 30,000. See, again, from a loss of rupees 80,000 we have been converted into a profit of rupees 30,000. So that means this is what is maintainable in the future. In the future coming days, this can be maintained. These profits can be maintained. Clear? Then the last one, 1,05,000 minus 25,000. That will be rupees 80,000. Rupees 80,000. So now total profits is how much? 80,000 plus 30,000 minus 20,000. That will be rupees 90,000. So 90,000 is the profit for 3 years. But what do we need to find out the goodwill? We need average profit. Average profit. What is the average profit? Average profits is equals to 90,000 divided by 3 years. 3 years. How much will that be? Rupees 30,000 rupees. Now I got my average profit. Now to find out goodwill, what to do? Goodwill is equals to average profit multiplied by number of years of purchase. So average profit is rupees 30,000 into what is the number of year of purchase? As per the question, it is 2 years, right? So the goodwill value will be rupees 60,000. Now tell me, this goodwill whatever we have found out, is it firm's goodwill or the new partner's share of goodwill? Tell me. This is the firm's goodwill. This is firm's goodwill. This is firm's goodwill, not partner's goodwill. Now how to find the value of partner's goodwill? Partner's share of goodwill will be partner's share of goodwill will be 60,000 rupees into the profit sharing ratio given to the new partner. How much is it as per the question? As per the question, how much is it? 40%. 40% is the goodwill share given to the new partner. Yes. So multiplied by 40%. That will be 6 4 20. So 24,000 will be the share of goodwill of the new partner. Now I have to divide this between whom and whom? Between the old partners. Have they given us the sacrifice ratio? Just check. Have they given the sacrifice ratio? No, sir, they have not given us the sacrifice ratio. So what to do? Old ratio minus new ratio again. So partners old ratio minus new ratio is equals to sacrifice ratio. Okay, partner's name was what? Gopal Govind. Gopala Govinda. Now what is the old ratio? 60 40. I can take it as percentage also. I told right before. Take it as percentage is better. Now the new profit sharing ratio was given somewhere, right? Okay, the new profit sharing ratio is given over here. So 35%, 25%. 35% and 25%. Tell me the final answer. 25% over here and over here 15%. So I have got my sacrifice ratio over here. I will just mark this in a different color. This is my sacrifice ratio. Now divide it into what ratio? What ratio? Into the ratio of 25:15. Do not just multiply 24,000 into 25% into 40%. Why? Because whatever ratios we have got, is it not fully is equals to 100. See, this is not fully is equals to 100 if you see, right? So don't multiply it with 100. Clear? So Gopal's share of goodwill and Govind's share of goodwill equals to 24,000 into 25 by how much? 25 plus 15 is how much? 25 plus 15 is how much? Equals to 40. So 25 by 40, and over here it is 24,000 into 15 by 40. So how much will this be? 24,000 into 25 by 40 is equals to 15,000, and the second part 25,000 into 15 by 40, sorry, that will be rupees 9,000. If you want to multiply the percentages, what you can do, 24,000, sorry, straight away take this firm's goodwill, straight away go for firm's goodwill, that is 60,000 rupees into 25%. How much is that? 15,000. Then again 60,000 into 15%, that is 9,000. Clear? If you are multiplying this straight away, if you are multiplying these ratios straight away, then multiply it with rupees 60,000. But if you are assuming this to be a ratio, that is 25 is to 15, multiply it with the partner's share of goodwill, that is 24,000. Clear? Don't get confused. Now next what to do? Next we will do what? Pass the journal entry. So first of all, start from the goodwill adjustment itself. So first entry, when partner brings in goodwill and capital. So what is the value of capital brought in by the partner? What is the value of capital? It is rupees 1 lakh. Plus what? Plus what? Goodwill. Remember, because it is clearly mentioned that he brings in his share of goodwill in cash. So plus goodwill is how much? 24,000 is the share of partner. Remember. So the first entry will be, first journal entry will be bank, or I can take cash account debited to what? To partner's capital account. Which partner's capital account? Guru's capital account. The new partner's name is Guru. Guru's capital account. Rupees how much? Rupees, if I write 1 lakh plus 24,000. 1 lakh towards capital, 24,000 towards goodwill. So 1 lakh 24,000 is being bought in as a cash. Okay. Then next. After this, goodwill division. Gaining partners account debited to sacrificing partners account. Remember, goodwill sharing ratio without opening any goodwill account. So who is the partner who is gaining over here? Who is the partner who is gaining over here? It is Guru. Guru's capital account debited to who are sacrificing over here? Who is sacrificing? See, one thing I just got into my mind. See, whenever I say gaining partner to sacrificing partner, that does not mean that Guru is giving goodwill to someone. That's not a gain, or that's not a sacrifice over here. Whenever I say gain, that means who is gaining with respect to profit sharing ratio. Who is gaining with respect to profit sharing ratio. Please do not get confused that, sir, the Guru is sacrificing goodwill, right? He is not sacrificing anything over here. He is compensating the partners over here for the sacrifices they have made, right? Don't feel bad for Guru. Guru is losing nothing over here. He is getting some more benefits over here. That's why he is bringing in goodwill as a compensation to whom? To the sacrificing partners. Who are the sacrificing partners? The old partners. Clear? So Guru's account debited to Gopal's account to Govind's account. Govind's capital account. Okay, remember capital account. Okay, what are the ratios? So 24,000 for the goodwill, and over here the distribution was in 15,000 and 9,000. 15,000, 9,000. Clear? See, if you have to see over here only, Guru's capital account was credited. That means the capital balance was increased for rupees how much? 1,24,000 rupees. But then I debited Guru's capital account once again. That means I am reversing the capital account by rupees how much? By rupees 24,000. That means what is the net amount remaining? Rupees 1 lakh. This will go towards what? Towards Guru's capital in the balance sheet. Okay. Next what entries to pass? So capital goodwill entry is done. Guru's capital account entry is done. Next entry. Revaluation was there, right? Remember? Now go on. So fixed asset is valued at rupees what? 4 lakh rupees. So what is the actual value of fixed asset? Rupees 3 lakh. That means from rupees 3 lakh the value has increased to rupees 4 lakh. From rupees 3 lakh the value has increased to rupees 4 lakh. That means there is an increase. So the account will be furniture, right? Or fixed asset, sorry. Whenever asset value increases, we will debit the account. Got debited by rupees how much? 1 lakh. Why? Rupees 4 lakh minus rupees 3 lakh. That will be rupees 1 lakh. Then going ahead. Investments I should make it nil. That means investment of rupees 50,000 becomes 0. That means the value is reduced. Okay. The value is reduced, right? Okay, fine. Let's keep it as it is for now. See if there are any more increases. Rupees 1 lakh 80 current assets value. Rupees 2 lakh it is also decreased. Loans rupees 1 lakh. Loan rupees 1 lakh. So therefore there is no increase, right? First of all, finish off this one entry. That will be, I will finish off this entry by passing it through revaluation account. For rupees 1 lakh only. Okay. After this, for the decreases I should pass entry, right? So first of all go for investments. Investments have become 0. From what? From rupees 50,000 rupees. So how much is the loss incurred towards investment? Whole amount of rupees 50,000 rupees. Clear? So whenever value of asset decreases, we will credit the account. Investment account rupees how much? 50,000 minus 0. Then current asset value has reduced to rupees 1 lakh 80 from what? From rupees 2 lakh. From rupees 2 lakh the value has reduced to rupees 2 lakh. Sorry, from rupees 2 lakh the value has been reduced to rupees 1 lakh 80. So therefore 20,000 rupees has been reduced, right? 2 lakh minus 1 lakh 80. Current assets. 80 rupees 20,000. Now this is what? Again transferred to revaluation account. Rupees 120 plus 50 is rupees 70,000. Yes. We are done with the revaluation account entry. But are we done? No. Last whatever profit or loss division entries was there, that has to be passed, right? So now see, revaluation account has been credited with rupees 1 lakh and debited with rupees 70,000 rupees. So that means where is the deficit? On the credit side. See, revaluation account should be closed completely. Why? Because there is no balance. Whatever the balance was remaining will be transferred to partners capital account, right? That transfer entry, whatever is there from revaluation account to partners capital account, that entry has to be passed. Now I am passing that entry. Now how do you pass that entry? I will debit revaluation account. Why I will debit revaluation account? Because if you see, think logically now, okay? Think logically. 1 lakh rupees has been credited, whereas on the debit we have only 70,000 rupees. So that means this is less than this amount. That means I need to debit 30,000 more to make these both equal, right? So I will debit 30,000 rupees now to make them both equal. Okay. So to what? To partners capital account. Which partners capital account? Only old partners capital account. So to Gopal's capital account, to Govinda's capital account. In what ratio? In old ratio. So what is the old ratio, sir? 60 is to 40, right? 60 is to 40, or 60% is to 40%. So 30,000 into 60% will be how much? 18,000. 40% will be 12,000. So we are done with this entry also. So that means we are done with all the required entries that was necessary for the purpose of preparing revaluation account and partners capital account. See, if you have to see, check if there's any general reserves over here. Reserves are not there, right? Okay. So reserve division is not required. If there was a general reserve in the question, that has to be divided. How to divide it? I will tell you. If there was a question, then general reserve, again remember the entry. General reserve account debited. Why? Because it belongs to capital. That's why I am reversing the capital. To reverse the capital, I should debit the account. To partners capital. Which partner? To old partners capital account. In my case, it is Gopala and Govinda. Partners capital account. In what ratio will you divide it? In the old ratio. Clear? See this logic I have told you before while starting before the admission chapter only. Please go back and look at the videos clearly. Clear? Okay. So what remains? The remaining thing is only the preparation of revaluation account, partners capital account and balance sheet. See balance sheet I told you how to prepare clearly, right? See whatever the revalued figures are there, just go on changing them. That's it. Revaluation account entries are already done over here. You need to just pass it over there. Then after this, what else remains? Partners capital account. Already the entries are passed to the partners capital account also. So we are done with it. Nothing more to be done. Then okay. One small correction that in the textbook. Here they have made some small errors. If you see, here they have made some small errors. See, they have taken Govind's capital account over here and Guru's capital account over here for the entry. This is not Guru's capital account. This was supposed to be Gopal's capital account. Clear? This was supposed to be Gopal's capital account. They have made a small mistake over here. And one more thing they have changed over here is they have started from balances carried on straight away. They have not taken the balances from the balance sheet. What they have done is they have adjusted all the figures over here directly. All the figures directly they have adjusted over here. Here itself they have adjusted all the figures to the capital accounts, and after making those adjustments to the capital accounts, they have straight away taken the entries in the capital account. So what you can do in examination is just like in the previous questions, whatever we prepared, the capital account, you remember, right? That same capital account you prepare. They won't deduct your any marks. Clear? Those two adjustments please keep in mind, and everything remains the same, and everything remains exactly the same. Clear? Okay. What else? Okay. The illustration number 3 was remaining to be looked at, right? I just saw illustration number 3 for the hidden goodwill part. So in this, if you have to see, look at the question. This is illustration number 3. Illustration number 3. In this, have a look. See, C was admitted for 1/6 of the share in the future profits and introduced a capital of rupees 25,000. A capital of rupees how much? 25,000 only. Then the new ratio is given. Cool. C is unable to bring in cash for his share of goodwill. They decide to calculate goodwill on the basis of C's share of profits and capital contribution made by him to the firm. Nowhere in the question they have given you the what? They have given you the value of firm's goodwill. And also they have not given the goodwill brought in by the new partner. That means we need to compute the hidden goodwill now. How do you do it? Simple. 25,000 into reverse this 1/6 share. Reverse 1/6 share. That will be 6 by 1 equals to how much? 25,000 into 6. It will be rupees 1,50,000. Clear? Rupees 1,50,000. Then after this, add all the capitals. Rupees 25,000 plus rupees 80,000. How much will that be? Rupees 25,000 plus 80,000 is equals to 80 plus 25 equals to rupees 1,05,000. That means if I simply add, without considering any goodwill, if I simply add the totals of the goodwill, the totals of the firm's capital, it will be rupees what? 1,05,000. But if I just reverse compute, it will be rupees 1,50,000. That means the difference between 1,05,000 and 1,50,000 is what? 1,50,000 rupees. 1 second. The difference between 1,50,000 rupees and 1,05,000 rupees is what? Is the value of goodwill. That is rupees 45,000. Clear? This is how you need to compute the value of goodwill. So if I just go down, here they have given the clear explanation on how to find the value of goodwill. Okay. After that, find C's share. How do you find C's share? 45,000 into his share of profit in the new firm. That is 1/6 is equals to, if I do, it will be rupees 7,500. That's what is matching over here. Got it? Yes. So then what? Then again find out the sacrifice ratio. Pass the journal entry if the journal entry was there. Clear? Simple thing. And all things remains the same. So whatever capital is brought in is rupees 25,000. Then out of that some amount has been transferred to goodwill and the remaining amount is taken to the partner's capital, because in this question he is not bringing in any cash for the purpose of goodwill. But in our previous question, if I have to go in this question, what they have done over here, they have clearly mentioned that he will bring in goodwill in what form? In cash form. So I computed the goodwill of the firm, computed his share of goodwill, and I assumed that he will bring the same amount in cash. But in this question, they have nowhere mentioned that he will bring in the goodwill. If you want, you can just refer to this particular para. They were nowhere mentioned that he will bring in the goodwill. So we'll assume that out of rupees 25,000, he will pay the goodwill. Clear? And the remaining amount after the goodwill will be the capital amount of his own. Clear? Okay. So by this we end the chapter on admission. So the remaining questions, please go through all of them. They are really simple. Okay. So I have solved one of the best questions that I can choose from this. And whatever question remains that you feel difficult, please drop a message in Telegram group. If possible, we will have a live session on that particular question. Clear? And if you have any doubts on this question, please, dear students, please drop your questions. Do not hesitate to drop your questions in the Telegram channel. My team will surely help you out with the doubts within 1 or 2 hours. Clear? Thank you.